Tech has changed. So should your tech show.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Yo Honey Singh. This is my story.
Alright team, our new auto show is ready. Now we need a promo. Something cool, got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hello and welcome. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vachrajani, and over the next half an hour or so, we'll try and solve all your stock related queries. So if we missed it in the morning, and if you haven't already, do start sending them your stock related queries, and we'll take care of all of them, hopefully, given time persists. But we've seen a very interesting segment of where the market is right now, above the 24,900 mark. So it's definitely something that we continue to monitor as we go ahead with the trading session. A very, very crucial last hour yet again. Yesterday, of course, was the budget. We were here on a Sunday, and largely we've seen that 24,600 was a mark that was breached and then saw follow-on buying. So it does seem to be a long-term support at that key level. But when you look at the heat map for the Nifty 50, it will key stocks as well that are working in favor. Power Grid, TAMO PV, Adani Ports, Tata Consumer and L&T are some of the ones which are doing very well right now on the Nifty. Reliance, Nestle as well as Adani Enterprises and Asian Paints are also some of the other key stocks that are working well for the markets right now. If you also look at the contributors for the Nifty 50, it shows you the strength of some of the key stocks. Now, of course, Tata Motors PV is doing well on the back of its, auto sales number for the month of January, which came in yesterday, really strong numbers. But largely Reliance, L&T and ICICI, those are the top three contributors. When you also look at the sectoral heat map, before I toss to Mahima for the broader markets, we've largely seen that sectors which are doing well in trade, Nifty Infra, Auto, on the back of very, very strong auto sales, 8 out of 9 companies beating estimates this time around. with the realty index now trying to stall a comeback post a weak month of January. Oil and gas, as well as Nifty FMCG are some of the other ones that are in the focus and the green today. But Mahima, overall in the broader markets, is it largely that the momentum is continuing from the benchmarks?
Unfortunately, no. That's not the case as to where the broader market stands, because the mid-cap 150 as we speak is down by about 0.2 odd percent, but the small cap 250 is slid around that 0.7% mark. So not really doing very well. Of course, off from its day's low point, both of these indexes, but still, the enthusiasm is not as good as, at least what we've seen in the benchmark indices. With regards to where, the BSE 500 is concerned, a lot of action happening with regards to news flow, some action with regards to handout with regards to where the budget stands. But overall, latent fee on the back of its earnings, the only company to come out with its earnings yesterday, is up 9%. Power Grid up 6.4%, followed by something like a KNR Construction, MRPL and Godrej Agrovet also seeing gains of about that 5 odd percent. But on the flip side, you have something like a Bharat Dynamics, which is seeing a downtick of around 8 odd percent. Intellect Design, Hudco, Gujarat Ambuja Exports, 5-star business, all of these seeing downtick of anywhere between that 5 to 8 odd percent. But with that, let's welcome in our guest for the day. We're joined by Tapan Doshi, research analyst at CA-Tapan.in, joining us now. And we'll also shortly be joined by Akshay P. Bhagwat, who's the senior VP at JM Financial, will be joining us. But before that, let's start taking your queries. Prashant is asking the first question about ITC. He wants to know if, he's holding around 446 shares at the levels of 342. Should he average at the current price for the next 1 year is his question. Tapan, what would your answer be?
Well, ITC is at a level now where valuation is now okay compared to only factor which we all know that almost 80% of the profitability, that is what is facing an issue from the tax point of view, and now the already additional tax been levied. So here there will be a problem, but I think valuation is okay. I think if it's for a maybe recovery will come, wait for 1 or 2 quarter more, because earlier at 400 it was overvalued. Now I think 300 at 13, I think he can stay for a little bit longer.
Got the view, Tapan, and welcome to the show. The next one, it's a very interesting query because Sriram Raghuram from Chennai, who is a regular viewer, has sent across his query on Bharti Airtel, and I hope this isn't a mistake because he's bought it at 590 rupees per share. Stock's trading just a tad below 2,000 rupees, so he might have bought it roughly around 2 to 3 years ago. 25 shares is what he holds, so currently he's sitting on a very decent profit of almost 34,000 rupees. He's 3x on his original investment, so good on you, Sriram. Would love if you would call us, tell us what was the process of buying it at such a low price. But he's asking if it's a good time to add more right now, Tapan. Is that something that you would recommend?
Well, at this valuation, first of all, congratulations. It bought at a very, very good level. Now the stock is perfectly valued at this level. I think it may consider a little bit 1 more quarter here. He can add it around. Currently, it is around 1955, maybe around 1850 or 1900 comes. He can add more. Yeah, but for long term, I am of course bullish on this. Profit growth is almost 31% over the time, and again the ARPU is improving. And in future, the price hike will come. So yes, he can add, but at a maybe 5% lower, he can add for a long term.
Okay, all right. So that's the view coming in on Bharti Airtel. But viewers who are tuning in, you can also give us a call on the numbers that will be flashing on your screen up there. Give us a call and you can go ahead and ask your queries while talking live to us. But moving on to the next question, Sunil from Mumbai is asking about Anant Raj. The company, he owns around 50 shares of this company at a buying price of 553. He wants to know the short-term target and stop loss for this one. Akshay, hi, a very good afternoon to you. I'll come to you on this one. After the data center push that we've been talking about since yesterday, that global companies coming in, to India will get a tax holiday. I think a lot of these companies have, come back in focus. But overall, with regards to where charts are concerned for Anant Raj, what would you recommend?
Good afternoon to all. See, from short-term perspective, there are multiple times the stock has shown a tendency to bounce from the levels of 500. We are trading around 540, 554 as we speak. So it's a good support from which on the weekly charts, the stock has rebounded again. And the way the prices are setting up, again, I believe 625, 650 can be the possible upsides with a time horizon of 1.5 to 2 months. So the suggestion is continue to hold, maintain a strict stop loss below 500 in case things don't go as expected. But 625 approximately is the upside one can look forward to, where you may book out your profits.
Got that view, Akshay, and welcome to the show. The next question that's coming in is, on a bunch of stock that Siva Prasad is actually, so I'm going to choose and pick a couple of them. He has a query regarding Trent, IRCTC, Tata Motors PV, as well as Power Grid. He's asking if he can enter either of these stocks, but Tapan, really strong commentary actually came in from Power Grid's management today. They held the conference call in the morning. I hope you had a chance to look at it. Any view by any chance that on Power Grid, if he can enter right now, because we've spoken quite a bit about Trent amongst others, but Power Grid, any view?
Power Grid, even I am quite bullish. The reason is there on the power segment and the transmission business and all that, and lot of grid segment need to be developed in future, and that is where Power Grid come into picture. They have a very good order book, and again now execution is improving. Even if I talk about the valuation point of view, I think at 16p it is available. I think this is a decent stock and available at a good valuation. Of course, he should get in and stay for long. I think from next 1 or 2 year focus will be on power segment. That this company will be benefited a lot.
Okay, all right. So that's the view coming in on Power Grid. The next question that we have is from Selva Raju, who is asking about Bharat Dynamics. Wants to know if this is the right time to invest from a medium-term perspective. Akshay, I'll come to you. It's on a free fall today, is what we've seen. Almost at its day's low point as we speak, down 7.5%. Would you be a buyer right now?
The answer is no. The reason is that technically after I think 2 to 3 months of consolidation within the 1400 to 1600 range, this week we have seen a price negative breakdown below 1400. So that's a short-term downside or a negative development on the technical charts. And in all probabilities, the downside target still 900 or 950 opens up on a medium-term perspective. So do not buy now. 2 conditions to buy: either the stock recovers its lost ground above 1400, then we take a review of stock. If not, 900, 950 is the apt level to rebuild your buying position in this counter.
Got the view, Akshay. But the next question is coming in on Meesho, and again a stock we've been getting a lot of stock queries on. Divya from Abu Dhabi is actually holding 100 shares at 203 rupees per share. So she is sitting on a current loss of almost 5,000 rupees. Asking if should she continue to hold. Tapan, at these levels at 157, since she's bought it at 203, would you recommend buying the dip right now? And is there anything that you'll be watching out for from the quarterly results?
Yeah, we have to watch for the quarter result because still the valuation looks quite high. But as she is already in a loss, so I'll not tell to sell now. But I think at anywhere near 5-10% or something, bottom should be provided the results comes proper. You see, the stock has gone up a lot, and the valuation were stretched at that level. Even the management commentary was okay, but not supporting the valuation. So I think she can wait for next 1 quarter and then only take a decision. But don't add at this level.
Got it. And definitely in quarter 3, while their placed order did rise by almost 36% for quarter 3, and there was some increase in the annual transacting order also, but so the losses expanded, and hence something that didn't enthuse the street as. So that's on Meesho. Another query that's coming in on BEL or HAL. Now, Ekambara actually from Hyderabad is asking us this question. He's asking if should he exit either of those counters now at the current juncture, because he's not made too much money, because he's bought at 430 rupees per share as BL, and he's currently continuing to hold either of them. Akshay, on the charts, BL has actually done well. Either if you have a view on BL or HAL.
So if I have to make a choice between these 2 names from the defense pack, it has to be BL. Now, there were a lot of anticipation which was built in prior to the budget. Well, there have been SOPs been announced, but the reaction is not so great post-budget on the SOPs announced for the defense. I think BEL still has a positive traction, considering the fact that on the technical charts, we saw a positive price volume breakout at the levels of 420, 425. We have seen a dip, but again, the stock is recovering from the base of 425. So that's a good indication from short-term perspective. Stay invested, continue to hold. Stop loss is below 415. And if the stock regains its lost ground, you can see targets of 450 to 460 seen in BEL in the short-term perspective.
Okay, all right. So that's the view coming in on BEL as well as HAL. But moving on to the next question, Ekambara from Hyderabad. Okay, no, sorry, we've taken this question. The next question that we have is from Abdul Rashad, who's asking us on RFC from Kerala. He's holding about 400 shares bought at the levels of 126. Wants to know a view from a 1 year on this one.
Can you repeat the stock name?
RFC.
IRFC. Okay, no, IRFC, if I talk about, no, the problem with this stock is that, no, already if you see the valuation is okay, but somehow, no, the sales and profitability is not coming up. And here the guidance, whatever the management told, it's not so exciting. Of course, the railway infrastructure is going to boom in near future, but still, I think the problem is the debt related to margin issue, sorry, for this company. So I think I'm not too much positive. Better stocks are available. If she wants to go, I think REC, PFC is a better option if she wants to go.
Got your view, Tapan. But the next question that's coming in is on IRCTC. It's another stock that we get quite a few queries on. And our viewer Sai Kumar is actually asking, at the current price, does it make sense to buy into this counter? Akshay, what would you recommend?
No, the answer is no. The reason is, again, these are names which are associated with the budget. A lot of speculative action builds pre-budget. Post-budget moves clears out a lot of things. Clearly, the price volume traction in this counters, be it defense, be it the budget names, are not so great post the event. Technically, if I were to see this, there is a support at 550, and that's an important support zone for the stock. And clearly, the trend is negative going by the last 4 months of price action. So the suggestion is, do not add at the current levels. At 550, there is a good chance there might be some uptick or a bounce, because that's an important support. That's the point where you consider buying the stock. That's the level of 550.
Okay, all right. So that's the view coming in on ICTC. The next question that we have is from Astha, who's writing us from Delhi, asking about Hindustan Copper, and she wants to know whether what should be the next course of action. Akshay, I think for everybody who was a part of this rally, or anybody who was not a part of this rally, now wants to know if the person can still be a part of rally, if there is any. It's come off from its day's high point today, Hindustan Copper. But do you think there's still a chance that somebody can get into and make some profits?
See, the stock has shown exceeding gains in a very short span of times. On technical parameters, it is highly overbought. It has come to a point where price fluctuations for the next 1 week or so will be high. You will get both opportunities on the buy side and the sell side, but clearly gone are those days where you buy it at the current rate and you're expecting 15-20% returns in a short time frame. So technically, the longer term picture doesn't change, but now we are getting into that choppy zone where things are rough from here. So the suggestion is that technically the support is around 540. You can anticipate some temporary rebound back again till levels of 600, 650 odd levels. But around 650, my suggestion is better to take an exit in the stock because I believe the share of its run and things may cool off from here or get into a range from a medium term perspective.
All right. Okay. So that's the view coming in on Hindustan Copper. We've got our next caller. Venkat is calling us from Mumbai. Venkat, hi. Very good afternoon to you. How can we help you today?
Hi, good afternoon. Good afternoon to the panel. I had a query regarding a couple of discom companies enter into, whether it will be KEI or Adani Green. Which of these two companies are more prospective, or if there is a third one which I have not mentioned, please do let me know.
Sure, okay. I'll take this up with Tapan then. Tapan, your view with regards to which of these companies he can enter into, with regards to a fundamental stand?
Well, I think KEI is a better option here, no, because Adani Green still that court case is going on. We don't know what is going to happen. Of course, and again, renewables in that, Adani Green already valuation is little bit on a higher side. I think KEI, is giving a good profitability, and even the prospects are good. Even the management commentary is good. And at this level, I think KEI is a better option. You can go for KEI.
Well, standard disclaimer, viewers, the channel that you're watching is part of the Rani Group, and so is the discussion on Rani Green as well. But viewers, time for the rapid fire round in this edition of Ask Profit. Akshay as well as Tapan, you know the drill. Keep your answers on buy, sell and hold, so we can take as many queries as possible. The first one is coming in on South Indian Bank. Now, our viewer has bought it at 42 rupees per share. Stock's been in a downfall since then, trading at 37. But Tapan, change in management, any view?
No, hold currently.
Okay, this is on Coal India. Hemant from Hyderabad is bought at the levels of 485. 207 is the quantity. Can he hold or sell, Akshay?
The suggestion is to hold.
Regal Resources, a recent listing, Tapan. Our viewer Hari from Chennai is holding 80 shares at 132. Do you track this counter by any chance?
Yes, I think he can hold at this level.
Okay. Cochin Shipyards, at the current levels, can the person make a new entry, fresh entry? Akshay, your view?
No, avoid fresh entry.
Okay, got it. The next one is from Lavanya from Vijayawada, and she's holding Endurance Tech at 2,600 rupees per share. Stock's seen some correction in the last few weeks. Tapan, is it still a good buy?
No. Sell from my.
Views on LIC. The viewer Sridhar has bought 100 shares at the levels of 810. Akshay, your view on the charts?
Avoid.
Paytm bought at 1,348. Should she continue to hold, Akshay, or move on?
Better to move on.
Okay, Bajaj Finance is the next one. Venkat's buying price is 1013. What should he do next? Tapan, your view?
Yeah, you can buy on dips also.
NCC, Tapan, stocks last few weeks. Your view, that's a question from Shivam.
Currently, it can hold.
Okay, Bank of Maharashtra, is this a good time to enter? Ramana from Bengaluru wants to know. Akshay, your view?
Avoid at this point.
CDSL or NSDL, what would you, CDSL or CAMS, these are the two stocks, Tapan. Either of them that, you could recommend to entering right now?
CDSL.
Okay. 5-Star Finance is the next one. Ravi Shankar wants to know from a long-term perspective, can he add this counter? Tapan, your view?
Yeah, maybe 10% down.
All right, okay. So that's the view coming in with regards to where 5-Star business stands. But with that, viewers, we're completely out of time on this edition of Fast Profit. Akshay as well as Tapan, thank you so much for helping us answer all those queries. But India market close up next, so do stay tuned.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mystery of the boards shall be unraveled.
Bro, nobody's like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस योर दिस इज माय स्टोरी।
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hello and welcome to India Market Close on NDTV Profit. I'm Hiral Dadia and with me is my colleague Sharad Dubey. An interesting day of trade because you've seen that rebound that's come in today's session after the sell-off that we saw yesterday after the finance minister's speech. In fact, we've retraced back to those 24,950 mark kind of levels as well. Gains of 0.5% coming in there. We're nearly trading at the day's highest levels, probably 20-30 points away from that if you see the intraday chart. Let's pull up Bank Nifty on the screens as well. There you go, 0.2% lower. There is pressure there, but that's mainly coming in from the PSU banking space. If you pull up the PSU banking chart also, that will tell you what's happening on that front. Advanced decline ratio, again, it is in favor of the declines. You have 1750 declines versus a 750 advances that is coming in there. So clearly the breadth, that underlying weakness that has continued, but some momentum that's coming in terms of Nifty 50 as well. Let's quickly look at the heat map of Nifty 50 and then we'll look at the sectoral space as well. In terms of the heat map, the breadth again is in favor of the bulls if you see in terms of Nifty 50 counters. Weakness mainly on a Shriram Finance, Max Health, Axis Bank, Cipla. Again, TCS, Infosys are a few of the other names from the IT pack which are under pressure, but good support coming in from a power grid. You have Tata Motors PV, which is seeing a strong move in trade. Adani Ports, you have M&M again on the back of auto sales numbers, which is doing pretty. On that Nuvama note is seeing some good support in today's session. Likewise, BEL, where you've seen a good target price increase coming in from one of the brokerage houses, is seeing good moves there. If you just quickly look at what's happening in terms of contributors of Nifty 50 as well, that will tell you what is actually holding up. RIL, L&T again on the back of the Capex announcement is what is seeing support there. ICICI Bank, Power Grid are the ones supporting, but Axis Bank, Shriram Finance, TCS, Titan are the ones which are trying to pull a Nifty lower. Let's quickly look at the sectoral heat map and then we'll look at the broader markets as well very quickly. In terms of the sectors, infra again on the back of the budget. Auto in terms of sales numbers is doing well. Oil and gas, in fact, that is going to be one of the pieces that we're going to do as well as a sector of the day, and that sector is up nearly almost over 1%. Media pressure, IT again pressure, healthcare, pharma down in trade, private banks under pressure. Defense, no major pickup coming in terms of the union budget commentary, and that's the reason why you're not seeing any sparks coming in terms of defense as a sector as well. Let's look at the mid-cap and the small-cap index on the screens, and you'll see what's happening there. Mid-cap, pretty flat in trade. If you look at small-cap 250 as well right now, that is seeing mild pressure to the tune of around 0.4%, but clearly underperformance as compared to the benchmarks. And let's pull up NSE 500 to see the individual stocks. Latent view, earnings reaction, KNR Construction, GMR Airports, Hinzink, a few of the gainers. What's losing out? Intellect Design, Bharat Dynamics, you have TCI Express down in trade. Godfrey Phillip, again, this is on the back of the excise duty hike that you have that stock trading under pressure. So an interesting market right now. The participation from DIIs is what we are already seeing what they are doing, but participation from FIs is something that we will know today, and that will tell you what direction probably the markets are going to take as well, Sharad.
That's right, Hiral. We'll be looking at the FI short covering if it's happening or not. Yes, of course, the recovery is underway, and that's one of the key reasons. There is a kind of a short covering coming in, but how much will it sustain? That's something to look out for. But Hiral pointed out the broader indices, they are still weaker than benchmark indices. Going ahead, the Nifty bank technical setup is becoming weaker as compared to Nifty. Options data is still suggesting there's a lack of direction in the market. Despite the recovery we saw, RBI intervention strengthened the rupee, and the European markets have opened in the red as well. There are key Nifty levels to track. February 1st low was 24,500. Intraday high today is near that 24,000 support level range is still between 24,600 to 24,800, and the very important 100 DMA level is being tested for Nifty Bank 51. That's the key level you should be watching out for. Important numbers coming in and a recovery after what we saw on Sunday, Hiral, and largely we see it's an index management at play.
Yeah, I mean, it's an index-led move that we are seeing right now as we speak. How sustainable is this going to be is the key question. That's why the FI numbers, as we pointed out, becomes absolutely crucial, because they will somewhere provide you that one kind of direction that comes in. Secondly, there is that psychological roadblock when it comes to the US-India trade deal as well.
That's a big overhang.
It's an overhang which is more of a psychological overhang, because when you see in terms of where the numbers are panning out, if you talk about the India-US trade data as well, it's not really had a major impact in terms of trade, right? So even if that happens in terms of the trade deal, it's going to be a psychological overhang that goes away, and that's what the key is going to be from here on. But the growth in terms of the budget is what everyone is talking about, because the finance ministry has stuck to fiscal prudence. They're looking at continuity from here on, and how much, Philip, will that growth continuity provide to India Inc. and provide to markets is the key question that we are talking about right now. In fact, let's get in Navneet Manot, Managing Director and CEO at HDFC AMC. Navneet, welcome to the show, and always a pleasure to speak to you. This is Hiral on this side. My question coming to you, and in fact, the discussion that Sharad and I were having right now is the kind of fillip that could be coming in for the markets on the back of the commentary that all of us have heard from, Finance Minister. Everyone's talking about a budget that has been of continuity. They have stuck to fiscal prudence as well in terms of FY27. Your key takeaways?
Sure. So you use the word continuity. I can add two more words. One is the credibility in terms of numbers, and conviction in terms of reforms, and continuity of policies, of course. So while we have ensured that we continue on the path of fiscal prudence, and particularly the goalpost of bringing down India's debt to GDP over the next 5 years by 2031, bringing it below 50%. I think it's a very good target, because once we reduce the debt to GDP and continuation, then only we'll be able to crowd in private investment, leave enough savings available for the private sector to invest from the overall household savings. So that's very credible. And the other thing, I think a series of new reforms that have been announced in the budget. And by the way, the reform train
works like all 365 days. It doesn't have to stop on a single station, which is a budget day. But still, I think Finance Minister used the platform yesterday to announce a series of new reforms. And one particular I'll talk about. So over the last couple of years, we have seen reforms in the area of personal income tax, GST, and corporate tax. This time, a lot of focus on custom duties, which is, I think, very critical to build the supply chain resilience, as well as not only make India an Atmanirbhar, but also make strong manufacturing power. So I think that was like one of the highlight which hasn't got discussed. It has centered around the STT, etc. But look at the bigger picture and many of the other measures that government has undertaken, and we must compliment them.
That's an interesting take, Navneet. Hi, Sharad here. Hope all is well. STT issue is definitely there, but you can see that across the market there were a lot of folks where they were not very happy with that STT increasing up. How does this now shape up for the markets now going ahead? Is this a smaller event which will be absorbed in and the long-term story remains intact?
So I'm sure the feedback from capital market participants have gone on the STT side, and it's been loud and clear. Having said that, I think we must kind of pay attention to what the secretary mentioned yesterday, that this is not aimed at enhancing the revenues, but it is also trying to curb the speculation in the capital market. We have seen government banning the gaming apps some time back, and when SEBI has published studies that more than 90% of the retail traders lose money in F&O, government has been looking at those numbers. Now one can argue whether this will have impact on the overall liquidity in markets, whether this will have impact on the overall depth and breadth of the market, and will this impact the overall sentiment in the capital markets. Of course, sentiments have got impacted, but again, I would request that we need to look at the larger picture and the government nature, but several other social objectives that they are trying to meet. On the market side, I think the event is behind us, and I'm sure the focus will shift back to global cues, to incremental macroeconomic data, corporate earnings, and of course the flow dynamics.
Okay, interesting point that you made, Navneet, because yesterday, immediately after the speech was over, we exactly had the same analogy where the government was actually looking at the gaming industry when it comes to speculation, and now we're looking at STT when it comes to speculation. So yes, a social impact that they're looking at as well. When you talk about flows, with yesterday's session, we did see how the DIIs reacted to the budget. Yes, probably a knee-jerk reaction coming in there. The question is, when will the FPIs come back, and what will get the FPIs back to India? How are you looking at those aspects right now? Because a lot of factors that are playing around.
So two things. One, I think on the flow side, over the last couple of years, the domestic flows have been strong. A large part of mutual fund flows are coming in the form of SIP, which is like small savings, over 10 crore accounts contributing 31,000 crores, which is like 3,000 rupees ticket size. And so they are very healthy, and I don't see any reason for any change in the views of individual investors putting money into equity market in a disciplined manner. I think that continues, and over a period of time, we expect that number to keep increasing. On the foreign flow side, over the last couple of years, we have seen foreign portfolio investors have been a net seller in the Indian market, while they have participated in several of the primary issuances. And it's an interesting trend. While they have been a seller in the secondary market, several of the primary issuances have seen good interest from the global investors. A lot of time people just think that it is a homogeneous segment, but there are different kinds of foreign portfolio investors. There are some who would be taking a long-term view on India, and I'm sure at some point in time, as earnings trajectory improve and valuations look reasonable, we would expect foreign portfolio investors to come back. Over the last couple of quarters, the momentum in some of the markets, particularly the AI-driven story, whether it's US, Taiwan, Korea, China, China, Japan, some of these markets have attracted exceptional amount of flows, while India, which used to be a darling of global investors, has not attracted flows. I think at some point in time this year, we are going to see a change in that trend as some of those AI related themes become overvalued, and on a relative basis, India's valuations have become reasonable. Our premium relative to other emerging markets has come down. Now it's in line with the long run average, and as fundamentals improve that have been undertaken, and second, as the overall earnings trajectory improve, I expect foreign portfolio investors to be a net buyer at some point in time this year.
The expectations is definitely there, and hopefully they will come back. Navneet, apart from this, the yields front, that has also spiked up, which recently we saw after the budget coming in, the rupee near its record lows, RBI making its timely interventions also. How do you see the yield and the rupee going front?
So rupee has depreciated, RBI has allowed rupee to depreciate. We must keep in mind we are a capital deficient country, we are a saving deficient country. We run a current account deficit which has to be funded through foreign flows. They can be in the form of FDI, they can be in the form of FPI flows, FPI both in the debt and equity. For variety of reasons, we have seen balance of payment in negative for second consecutive years. So when you have to fund the current account deficit, then the only way is that RBI sells dollars in the market, which we have witnessed over the last couple of quarters. Now, on the FDI front, interesting part is that while the gross FDI has been decent, is the net FDI flows have been negative because some of the Indian companies investing offshore to build global capabilities, and also a lot of private equity or venture capital or some of the MNCs selling a stake in the secondary market and that money has got repatriated. My sense is that several of these private equity and venture funds who've been able to return capital to their limited partners over a period of time, they enhance the appeal of Indian markets, that this is where there is a robust primary market and one get an exit for their investments which is made at the early stage, and this should actually increase the appeal of the Indian market over a period of time. As I mentioned earlier, in this year I feel optimistic on FPI flows. I also feel optimistic on the FDI flows, particularly the announcement on the data center, the tax holiday announced till 2047. India is a place where you get the land, you have the power, that's energy, you get the water, you get talent to run these centers. I think we have everything, and several of the state governments have been working very hard. We have seen few large global companies announcing setup of data centers. I think that will gather more steam, and once we get some of these large ticket FDIs and FPIs returned, I think rupee has got undervalued. In a way, it helps exporters, but over a period of time, I think that the currency, recently the currency has got undervalued, and I think that should also help in attracting flows as well as helping on the export side.
The interesting point that you made when it comes to the data center side of business with the tax holiday. We're talking about fiscal credibility already over here. Now, when it comes to FDI, the push for asset monetization as well, we're talking about what 80,000 odd crores is what they're talking about, because I don't want to use the word divestment or disinvestment or any of that, because it's the most abused word right now over the last couple of years, right? So when you talk about asset monetization as well, will that somewhere help to impact the capital flows? Talking about 137% increase in disinvestment projections, the proposals for PSUs, land monetization has come in. We're talking about REITs. All of these levers also come in play when it comes to, attracting capital flows. And to the new Direct Tax Act also, which starts in, how does this?
So you rightly picked up, this is one of the big highlight of the budget I mentioned yesterday, that over the last couple of years, we have seen the 3D firing for us as far as the fiscal improvement is concerned. Number one is the digitalization leading to better tax compliance, a wider tax net, formalization of the economy, enhancing the tax revenues. The second D is the direct benefit transfer, which has reduced leakages in government expenditure as well as improving the last mile delivery. The third D is the higher dividend from RBI and PSUs. The fourth D is the disinvestment stroke monetization, which this year's budget has targeted a larger number. I think over the next several years, this would be one of the big lever for giving more money to the government to spend on capital expenditure or on the social spending. You rightly picked up a substantial increase in the divestment target of this year, and also the feature in the budget was a talk about land monetization by PSUs in the form of REITs. I think together these two over a period of time can become a significant a source of money for the government, which can be used for supporting the growth momentum.
That's right. But Navneet, another volatile asset class is the gold, silver, the precious metal segment. What will be your advice to the investors, who had exposure maybe in mutual funds or maybe direct? What's your view or your advice to the investors?
So I remember a few years back when we launched our silver ETF and silver fund of fund, we talked about everything, the industrial usage of silver, the demand supply dynamics of silver, and maybe I think investors should have a small amount allocated to silver, but that time most of the investors were not willing to hear. When prices went up manifold and suddenly a large number of investors getting hugely interested in silver, but that's nature of the markets. I've been saying for some time that these are highly volatile asset classes. In fact, in last couple of days, we have seen significant volatility. Now compare that with like equity market or the other assets where you invest like bond market. These are extraordinarily volatile. They have long cycles while they have done well in recent past for a variety of reasons, and I'm sure they get discussed on your channel day in and day out. But at this time, so investors need to have some exposure to them for the reasons that get discussed every day, but at the same time should not go overboard on allocating. These assets don't earn anything, unlike financial assets like bonds where you get interest, or equity which ultimately delivers in line with the earnings growth of the underlying companies. You need to have a small allocation as a hedge in your portfolio, but not go overboard when prices have run up so much.
Absolutely. I think that's the key, Navneet, from here on, because everyone's actually gone overboard. And I think wives are the most happiest with the collection that they've had when it comes to gold and
only
silver.
Recently. So on a lighter note, on a lighter note, Hiral, I've been saying that 1 kilogram of silver could buy 2 units of Nifty, and then nobody wanted to buy that. And recently, I think just 3 or 4 days back, there was a day when 1 kilogram of silver could buy 15 units of Nifty. So you decide what has become cheaper and what has become richly valued.
Absolutely. This analogy is the best, and I'm going to make sure I put this up on social media ASAP, so everyone knows, where to weigh in and which side of the seesaw to actually look at. But thank you so much for joining. Always a pleasure. I know this has been a time where you've always come on morning shows. Very rarely an exception that you've made. Thank you so much for that. And looking forward to speaking to you more often as well. So that's Navneet Manot from HDFC AMC as well, with a candid conversation that we've had so far. And as the conversation continues with regards to the budget, we have Anurag Mittal, Senior Executive Vice President and Head Fixed Income at UTI Asset Management Company, joining us in the studio itself. Welcome to the show, Anurag. Always a pleasure to speak to you as well. Our first question to you is, how would you rate the budget speech yesterday with the kind of reactions that have come in so far as well?
Thanks a lot for inviting us. So budget, I think, was quite focused, and it was largely a continuation of previous budgets. If you see, So in the last couple of years, the government has been focusing on improving the manufacturing capacity, focusing on data centers. This budget, they also talked about rare earths, etc. So despite them expecting growth at 6.5% to 7%, they had a chance to consolidate much more meaningfully on fiscal. But they continued, I think, the focus on public capex. And that's why we saw the 12 lakh crores capex announcement as well. And so I think overall, I would say the budget was quite growth oriented, and it's taking into account the external vulnerabilities that we are facing right now. So it's trying to bulletproof the economy with those regards.
Well, hi Anurag, Sharad here, and of course RBI is also trying its best to bulletproof the economy, especially with the volatility we are seeing in the fixed income market. But yields, there was a sharp spike today after the budget reaction coming in. Of course, the borrowing. What's your take on that?
Right. So like I said, given that growth expected to be quite strong in next fiscal year, the market was expecting a much more meaningful fiscal consolidation. So they were expecting the debt to GDP to go to 55% and probably fiscal deficit to be somewhere close to 4.1, 4.2%. So the gross borrowing number that the market got, which was 17.2 lakh crores, was a tad, I would say higher than what we were expecting, probably close to 16 to 16.5 lakh crores. And that's why we are seeing the sell-off. Because next year we again have the pay commission award, which will again push up the fiscal deficit. So in those regards, if the government has to reach to 50% by 2031, and we're already at this 55.6, so it's a very, very tough journey, especially if you consider the pay commission. So unless and until the nominal GDP growth picks up by 13, 14%, it's difficult to reach that 50% mark by 31. So probably the direction and the way I think the borrowing number came caught market by surprise.
So do you think then the market, how will the market actually absorb this kind of additional supply that comes in? Will the RBI need to step in with regards to OMOs as well to come and anchor these yields then?
Absolutely. We think even next year, RBI has already done more than 6 lakh crores of OMO this year. If you look at the BOP trend and assuming no major US-India trade deal, probably next year also we could see a BOP deficit. So in that kind of scenario, we are expecting RBI to do at least 5 lakh crores of OMO next year as well. And we also expect additional demand to come from pension fund managers. So mind you, this year, because of the change in asset allocation pattern, the pension fund managers did not participate meaningfully in the government bond market. So we do expect next year incremental demand from them to come about 1 lakh crores. So overall, from a demand supply dynamics, we think overall situation should be fairly balanced. If you look at the bank's demand also this year, it was very, very muted because they were focusing a lot on credit growth. But if you look here, now it has been at the lowest it has been in the last 5 years. We think even bank demand on government bonds should come quite meaningfully next year.
And Anurag, just to put that in perspective, there has been a lot of rating upgrades also coming in, and the entire community was waiting for some big flows coming from outside as well. Will that start happening in? There's going to be some kind of index management as well?
So a lot would depend on the direction of INR. Because foreign investors, when they come typically into bonds, they come unhedged. So assuming a 3.5% depreciation, our spread compared to the US or the risk-free rate is not really material right now. So they need to see some stability on the currency front, which will probably come once we start seeing some positive direction on India-US trade deal perhaps.
So okay, with all of this said and done, how are you looking at the liquidity management from here on? Because we're looking at strong credit growth. There is a heavy government redemption calendar of what, 5.5 lakh crores as well. Will it impact your banking system liquidity if you have to look at from a FY27 perspective then?
So as per our estimate, we should end the year with 3 lakh crores of surplus liquidity. And if you look at next year, typical currency leakage in an annual year is about 4 lakh crores. If you add in, probably because of FX outflows, again 2.5 to 3 lakh crores and some CRR leakage. So probably we are, like I said, we are estimating about 5 lakh crores of intervention from RBI just on the bond side, on the bond buyback. And probably we expect RBI to continue to do VRRs to provide temporary liquidity to banking system. So I think RBI has been quite serious that it wants to maintain liquidity at a positive 1% of NDTL. which is about 2.5 lakh crores. So we expect that RBI will continue to maintain that in next year as well.
And the last one is the RBI MPC meet is also coming, and just like to take your views on it, because inflation is also there. It's benign right now, and there's a change happening in the food constituent as well. So how do you see these factors moving, especially for the RBI MPC meet?
So if you look at broad picture next year, and I think if you look at RBI, they always look at forward-looking inflation. Next year, inflation is likely to average around 4.5%, even after the new CPI.
So it remains in that band.
It largely remains in that band. So unless and until it really changes materially, we expect RBI to stay put, and we expect policy rates to remain lower for longer. It's largely like a post-COVID scenario. So if you remember, in 2021, RBI kept the rates at a lower rates for longer and kept liquidity. So that's the kind of scenario we see it playing out this year as well.
Okay, so I think it's going to be interesting to see what the RBI does as well, because for their management, liquidity management, everything becomes key at this juncture. But thank you, Anurag, so much for joining in. Always a pleasure to speak to you as well. So that was Anurag Mittal talking to us about the entire system when it comes to the liquidity management in terms of what the RBI will do from here on as well. We'll quickly slip into a short break. On the other side, we'll get you the management of Yatra, who will be speaking to us on the impact of the announcements in the union budget. Please stay tuned.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what?
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर।
Welcome back to India Market Close, and look at the recovery for Nifty going past that 25,000 mark, and Nifty Bank also showing a good recovery. It's a day's high level. 25,032 is the current moves coming in. Of course, the recovery we see, it's more than 300 points from the day's low. Nifty Bank, let's see how the story is unfolding. And here also we see largely it has turned green. That's a good sign coming in. Mid cap and small cap indices also showing a good up move. UPL also, the results are out, and in fact we see a good spike coming in the numbers, and you see the revenue that's up 13% on your basis. The internals also look decent. Companies of course on a debt reduction path, and we will be looking at the con call what the company is suggesting. But the stock itself is at its day's high level. Stock is up 4%, and we will get you more details as well on that. But moving on, we are talking about the budget and the tourism industry, and joining us is Siddharth Gupta. He's a CEO at yatraonline.com. Good afternoon, Siddharth. Always a pleasure to talk with you. Siddharth, good announcements coming in the budget, especially the TCS being reduced on the overseas packages, and a focus, of course, there on travel tourism, especially from the spirituality side. How do you see these key budget announcements for the sector?
I think, thank you so much, first of all, to have me here. It's always great to be on this forum and with you. I think budget continues to build on the solid momentum that we've got from the last budget. I think government has continued its focus on improving connectivity, developing temple towns and other tourism sites. And I think the TCS reduction from 20% to 2% is going to be a big boost for everybody. I think what all audience should know that this initiative of TCS was primarily to be an indicator or a marker for government and not to earn money from TCS. And I think this change from 20 to 2% gives more money in the hands of tourists, and it will boost the entire sector as well. But building on that, corridors being announced, it helps further improve connectivity, and I think regional tourism would hugely benefit from that. I think focus on skill development, which was announced by the Honorable Finance Minister, that would add to the overall boost that the industry is seen over from a demand perspective. So overall, a very, very positive budget for us.
A very positive budget when it comes to tourism, Siddharth Hiral, on this side. If you could help us understand the unit economics as well of reduction of the TCS rate on sale of overseas tour packages to 2%. How does that work?
So frankly, if you look at how TCS was first introduced, it was primarily government trying to keep a marker on where our foreign reserves were getting used. And you can always claim it back at the end of the year when you're filing your returns. So it's like a capital which is stuck with the government. Government doesn't know what to do with it. And you have to wait for 12 months to claim that back. So I think, getting it down to 2% gets that additional, 18% out back into the pockets of the traveler. So it helps them plan and few more travels, hopefully, in the year. So it's got a direct implication on the boost. Obviously, the declining currency has taken a bit of sheen off because people have become a bit more careful with their budgets. But for sure, this will be a liquidity pump back. Very difficult in exact unit economics of how it's going to impact the sector, but it would make you plan for a few more trips in the year.
That's pretty interesting on that. And just have a query on that, Siddharth. Of course, dollar is kind of, not in our favor, but going ahead, with this TCS announcement also coming in, which countries are you seeing the inquiries picking up? Because right now also Q3, Q4 is generally a heavy season for holiday segment and for abroad trips, the packages which we call it. Of course, Euro is also not in our favor right now. So is it Asia? Is it Middle East? Where is it?
I think it is spread beyond the traditional routes that we have seen in the past. We've got a significant traffic move to locations like Japan. We've got a lot of traffic going towards Southeast Asia, Vietnam. Some of the locations have picked up, but we also have a strong momentum towards the GCC countries. So Dubai being pearl of it all, so there's a huge amount of traffic going there as well. So overall, people want to go in for newer experiences where, they want to explore new parts of the world. I think Indians are tourists by heart. So I think almost, there is a bit of a shift. There used to be a huge amount of focus on US and Europe earlier, but now we're seeing it getting democratized across almost all continents. So we've got a fairly decent amount of traffic going towards Australia, New Zealand as well. So very, unheard of or low traffic areas are getting a lot of attention now. Yeah.
Okay, so interesting takes coming in there. Thank you so much, Siddharth, for joining in. Always a pleasure. These are quick conversations that we are having across managements with regards to the impact of the budget, and hence a short conversation there as well. So that's the management of Yatra online, clearly indicating that this has been a positive budget for the industry. In fact, as we speak to the management as well, the stock trying to inch towards the day's highest levels with minor gains of 0.3% coming in there. But moving on, we are late, but this is the Heard on Street segment that usually Sharad Dubey gets for us with all the chatter from the dealing room. In his absence, I'm going to pick it up. 3 stocks that we're looking at. PB Fintech, that's one of the counters, but there is a potential buzz of a fundraise that could be coming in the works. The stock, though, under pressure today, and the company might be looking to do an acquisition to start a new line of business. We will wait for business. We will wait for any clarifications to come in on this front. So there's a PB Fintech. On number 2, you have a Kalyan Jewelers, which is also Heard on Street, where there are buy flows coming in on a PMS desk at lower levels. That stock down nearly 1.5% in trade today. And thirdly, you have Varun Beverages. Now, this has been making news since quite some time. In fact, they were forced to cancel one of the transactions when it comes to acquisition in Tanzania, and now there are sell flows coming in on the HNI desk on a Varun Beverages as well. But dealers are indicating weak December-ended quarter earnings because the quarter has been absolutely weak for all beverage companies, taking the weather into consideration, and that's what has had an impact on all beverage companies, and that's what probably is being looked at for a Varun Beverages as well. Let's see what the earnings come in. So that's the Heard on Street segment that we're looking at, but time for a quick rapid fire again, Sharad.
Well, yes, that's pretty much interesting list you have got. But joining us is Amit Goel. He's a partner and co-founder at Blue Oak Wealth. Good afternoon, Amit. We'll start our rapid fire segment, and I'll be giving you the company's important levels, and we go very fast on that. First one is Latent View, strong set of Q3 numbers. What's your view on that?
Latent View, a very strong move, and a stop loss below 400 is a good entry point. We could enter at these levels for targets of about 500.
There's Intellect Design, it's down almost 35% from 52-week high levels.
Intellect Design, it continues to show weakness, and I don't see any entry point here. The nearest entry point that I can see on the Intellect design is around 400 levels, 700 levels.
And Bharat Dynamics, a weak set of quarterly numbers?
Let me check that. Yeah, weak set of quarterly numbers leading to this downfall. It continues to slide on the downside, has broken important levels at 1,000, 1,100, nothing before that.
The agrochemical space is buzzing. Sharda Cropchem margins have expanded here.
Yeah, Sharda Cropchem has given a very strong move, and it looks like it is going to break out from the 1,100 levels. So any sustained move here is a good opportunity to enter. However, the stop loss on this is a little risky. It's a little big. So maybe a percentage stop loss of about 3% or 5% would be advisable for a trader.
And Power Grid, they have hiked their FY26 capex also.
Let me just see that. Yeah, see, I would avoid Power Grid because it's been in the news. They have done some good things, and the positive, very sharp move. It's already up by 7.5%. So I'd probably wait for a small dip because the trend is down. So any dips towards 250 to 60 levels would be a good entry.
And the last one, Northern Arc Capital stock has tanked post Q3 numbers. What's your view on that?
Northern Arc, right?
Yes.
No. So it has been in a sideways trajectory for some time, since about 6 to 8 months, and has now broken through that level. So it is forming new lows, and I would avoid getting into longs here. Support levels on this stock happen to be around the 220 levels. So if there is a retest at 220, one could possibly consider going long here.
All right. Thanks a lot for that. And now joining us is Gurmeet Chadda. He's the managing partner and CIO at Complete Circle. Good afternoon, Gurmeet. Markets are rejoicing, and just as we have come, the markets are at the day's high level as well. Seems like market was discounting something in the last trading session. Now, the long-term picture, what is there now?
No, Sharad, I think there's some reprieve, but the breadth still remains level. Obviously, it's picked up in last half an hour or so. Also, apparently, some margins call got triggered because of the commodity meltdown as well as the metal meltdown as well. And then you had the STT news. So too many things happened in quick succession. And I think now the market would digest news in terms of earnings, in terms of capital expenditure, which are the sectors which are getting more priority in budget, and it will eventually be business as usual. But I think from a sentiment point of view, market was actually expecting some kind of a relief, and actually turned out the other way. And that's why we saw a bit of a reaction we saw yesterday, along with, the metal meltdown.
Gurmeet, good afternoon. Hiral on this side. You're talking about the metal meltdown which is happening, which has continued as well. The bigger issue right now that everyone is talking about from the budget is STT, which has really spooked. Everyone is saying the traders, not the investors. Do you think this is a right decision from here on? I mean, how are you looking at it? Or do you think it's just a knee-jerk reaction? Markets will absorb it.
Yeah, I personally think it wasn't needed. But government obviously will have its own thought process in terms of how to protect the retail traders. What we have seen is very high activity levels by a few HFTs, which is creating some bit of, if I can use the word, disorderly movement in markets, especially during expiry. So, I mean, there must be some thought process to it. But, when sentiment is low, when you are actually having capital outflows, I think the timing could have been a little better. But as I said, I think it really doesn't impact people on the long side like us, who actually are in the cash segment and believe in more buy and hold kind of a strategy. So there will be opportunities, I think, long, very, very sharp correction. Some of them are actually at, if I can use COVID kind of valuations in a lot of spaces. And, so this is a great time actually to do some stock picking. I know it's not easy. You need a bit of a strong stomach for this kind of volatility. But I think things looked oversold in a lot of pockets to us. And I think there are a lot of opportunities which are emerging. So if somebody is patient, I think the next few quarters could actually be very good for stock picking.
Okay, so, Gurmeet, when you say this is the best time to do stock picking, with that, if I have to attach a couple of announcements from the budget, specifically when it comes to on the customs duty side as well, because that is one side of the positive announcements that have come in. which sectors would you advise are ripe to actually look at?
So I think the banking numbers have been very good. I've not seen credit growth at 14.5% for a long time. And this coupled with one of the best asset quality metrics, I think there were initially NIM pressures as well. I think gradually that will ease out. And we are seeing even some of the tier 2 banks doing very healthy credit growth of 15-18%. So, so we like the larger ones like HDFC, ICICI. We have Federal, RBL in the portfolio. Some of the NBFCs have reported very good set of numbers. So financial space we like. We also think some of the capital market plays have been impacted and will get probably. So probably the AMCs will do better versus, let's say, the pure broking kind of names. So I think that's something we are looking at. Auto numbers were very good. I think the market actually missed, including Tata. M&M had, again, another very good month. Maruti reported decent numbers. So I think a lot of auto ancillaries have seen sharp correction. Some of them are at 50, it looks good. And from a budget point of view, I think defense, semiconductors and data center related areas is what now we are tracking and trying to figure out more, because we don't have pure, let's say, semiconductor or data center plays. We more have ancillaries and more the ecosystem plays. So that's something we are also looking at.
All right. Gurmeet, stay with us. Over to Varsha. And Varsha, what's the important sector of the day? A lot of sectors have jumped up in the last 30 to 45 minutes. Must be hard.
Well, I would say OMCs, today we are going to highlight on OMCs, why OMCs are gaining. There are two reasons why. One, of course, no mention of increase in excise duty on petrol and diesel in budget, and this removes a major policy risk for OMCs. Now, the excise duty collection actually rose from 3 lakh crore to rupees 3.63 lakh crore, but this is on the back of higher excise on cigarettes and tobacco and not from petrol and diesel. Now, the second reason why OMCs are in focus is, of course, sharp fall in crude oil prices. If you see, Brent crude fell almost 7%, and how this impact, so basically lower crude is equal to lower raw material cost for OMCs and higher margins. Now, how this will benefit OMCs, let's talk about that. One is the major overhang has been removed. Policy risk was the biggest uncertainty that has been removed, and number two is marketing margins. If I were to talk about fall in crude price can lead to higher marketing margins by almost 2 to 2.5 per liter, because earlier when the oil prices was $70 per barrel, over there the margins had dropped around 4 to 4.5 per liter. At $65 per barrel, there will be huge expansion when it comes to margin. Overall, if I were to simplify onto the sensitivity when it comes to the margins, impact of rupee 1 liter margin change, if I were to talk about, IOCL will have an impact of almost 14% when it comes to EPS and 8% at EBITDA, while HPCL will have a huge impact of 24% to EPS and 13% at EBITDA. So these are basically two reasons why OMCs have been in focus as of today.
Okay, so interestingly, why this is the sector of the day. Thank you, Varsha, for getting us all the details as well. Amit, your views when it comes to what the charts are indicating for OMCs right now in today's session?
I mean, there has been some strong move in OMCs, oil and marketing gas companies, no doubt about it. And with company volumes and all the reasons that Varsha has so kindly shared are areas. I would rather stick with some large cap, because while there has been an up move in the markets for today, the structure is weak from a broader indices perspective. So I would be a little cautious, and there would be some bit of a flight to safety sort of a theme playing out in my swing trading portfolio. So amongst all these, I would like to bet on Reliance Industries. Not a pure play Hindustan Petro or BPCL, simply because this is more stable. It is a low beta stock as compared to the index, and given the volatility, given the uncertainties in the markets, I would stick here. And so a move in Reliance is very heartening, and Reliance also has a very technically oversold kind of a trajectory. So from these levels at around 1390 odd levels, keeping a stop loss of today's low at 1335, one could look at targets of 1430, 1450 on this.
important levels for Reliance as well. Gurmeet, I also want to get you on Reliance. This year might be an inflection year for Reliance, value unlocking coming in as well. A lot of interest, being built up. How do you see Reliance going ahead this year?
So Sharad, I think operating performance-wise, I think Jio and retail, in my view, are a little soft. Retail also was single-digit despite so many inorganic acquisitions. ARPU in Jio platform is hardly moving like 1 rupees a quarter. It's I think 212, 213 if I'm not wrong, and Airtel is 255. So there's some gap to bridge. So I think there are two triggers. One, obviously, ARPU moves up. There's a bit of a tariff hike, which I think can re-rate it. Second, obviously, is the Jio IPO. I think they are awaiting a 2.5% approval versus currently the minimum being 5% in terms of the initial issue size. I think if that comes, so if you see Bharti is already at about 130 billion kind of a valuation. If Jio taking that as a benchmark, Jio should be 150, 160 billion. And at current market cap, Reliance is hardly 200, 210 billion if I'm not alone, is probably 150, 160. So I think if you do the SOTP basis, there could be some, I think it's at a very high holding company discount. So I think that those two triggers to me, which is, ARPU pickup and Jio IP would be two major triggers for Reliance. Also some more strength. You want to see the new age business now doing more heavy lifting. On let's say they do 23,000 crore PAT every quarter, you want incrementally new age business to contribute more. So I think these two things, when they play out, I think it looks pretty good.
That's with Reliance Industries. Let me just quickly address the commentary that's coming in from Finance Minister when it comes to gold, silver price surge. And the reason I want to mention this is because we've seen a major bounce back right now as well in gold and silver. Where the FMS said that the gold volatility is mainly on the back of the global uncertainties, and they're seeing a natural tendency to rush to gold as there's not enough trust in one currency. In fact, globally, central banks are investing in gold and silver right now. When it comes to other aspects in terms of the rupee as well, clearly addressing it that she knows that rupee is a concern at the moment, and the RBI FinMin is constantly in when it comes to the rupee movement so far. So there is something that is brewing on that front as well. In addition to this, in terms of the roadmap in banking, banks today are in a position of strength. Quality of assets are high. There is a high-level committee that they will be looking at in terms of bank consolidation and the blueprint for what banks can be like by 2047 is what they're looking at. So that's the commentary that we're picking up so far. And secondly, you have S&P, which has come out and said that the India budget is actually balancing the fiscal consolidation with infra and the manufacturing push. And it balances, they're expecting the government to meet the FY27 fiscal deficit aim despite the lower GST revenues. Those are key comments that we're picking up so far. And keeping the budget theme in focus, we had a big market voices to share their insights of what they make of the fiscal policy.
It reflected that what has been happening in the stock market in the sense of massive underperformance and currency underperformance, that in that environment to do this just looks more like a priority of the government is not there or something like that rather than later. But you see all these big mutual fund guys in India come on your channel and say that it was all good. So who am I? I'm the smallest mutual fund in the country. If they can handle liquidity, we can handle it. And I don't think that instantly people will make that as a negative. But I think it was more to show that anyway we are underperforming on both currency and this thing. To do this to the same sector in that sense, I felt was a negative.
If I was to highlight a concern that emerged, which is where I think the conservativeness that the government has used in projecting a nominal GDP number or the tax projections, I think the extension of that on the financing of the deficit. So if say 17 lakh crores is your deficit, how do you finance that? And I think the assumptions made in that are at risk of undoing the remarkable fiscal discipline that we have seen. So there are some assumptions made which actually make no sense to me, or very little sense to me. And as a result of that, the gross borrowing target has turned out to be higher than what the bond markets expected. And yields have actually gone up when they should have been going down.
Brilliant job, but communicated very badly.
Okay.
I mean, particularly the stock market guys. By doing that, 10, 12,000 crores is nothing in this size of the budget. 50, 60 lakh crores you're talking about. You're talking about Viksit Bharat, you're talking about tax break for 22 years. I mean, such big things are there in that. And suddenly you do that small thing, spooky thing, STT, this. I think that was mindless, but otherwise it's a brilliant budget.
Budget is, we should not see it only arena where big bang announcements are going to be made. Look at the last year example, be it the announcement on the GST, be it on the measure of reforms on the labor side, that were all done even outside the budget. Budget, you have to take into account, it's also like an accounting exercise where you will get the big picture over there rather than just for one fiscal year only. The good news on the one fiscal year, which is getting overshadowed by this STT hike, is nominal GDP growth forecast is being given at a double-digit handle. Remember, for this ongoing fiscal year, it's a stretch even to hit a 9 mark, and that shows up in your revenue growth and earning growth also. If double-digit nominal growth is making a comeback, then your revenue growth, which is also following your nominal growth, will also follow that particular mark. That keeps you in a safer terrain, like earnings will follow.
The important voices, we are covering at NDTV Profit, but there is a recovery not only in markets but also in silver and gold. That's what we have been getting the data from silver, almost a 14% recovery. Nifty Metal Index, that's up 2% as well. Gurmeet, again, it's the story repeating itself after a massive volatility last 6 or 7 trading session. And now again there is an up move coming in. What will be your advice to the investors, if they have exposure via direct stock or maybe via ETFs or silver Bs?
I think the message is stick to asset allocation. The assumption that gold cannot correct 20% or silver cannot crack 40-50% can happen in 1 or 2 days. And I think we are in this kind of environment. I think the best thing is to be more, maybe at our level, we think gold, is more a hedge or a portfolio insurance to what is happening geopolitically. So maybe 5-7% exposure to precious metals from a strategic asset allocation may not be a bad idea, but don't go overboard. I think, people have forgotten in 2022, similar stories were made on cobalt, nickel, lithium, being the new EV play and being the new gold. And then they cracked 50-60%. So I'm just saying, just don't go overboard. This is a market where you stick to basics, stick to asset allocation, and any dip in gold for not up to 5-7% in the portfolio as far as precious metals go.
So that's with regards to where, your metal side of the story goes. Amit, in these last 5 minutes of trade, anything that comes to your radar? Because we've climbed to the day's highest levels across parameters right now. Anything that you're spotting?
Like ICICI Bank, because I maintain my bias towards flight to safety and the larger names because they offer me a little more stability in terms of the price volatility. So ICICI Bank, if you see the up move in ICICI Bank with a 1.5% up move, it has also taken support at the previous technical trending uptrending slope at around 1328, which will be my technical stop for targets of about 1380 and 1400 onwards. So the targets are actually open on ICICI Bank because it is trying to move up from a technical bounce, from a technically oversold territory, and hence it could move up to 1400 and beyond.
Okay, so that's an ICICI Bank that comes in on this Amit's radar right now. But thank you, Gurmeet. Thank you, Amit, so much for joining us on the show. It's always a pleasure to speak to you as well. And clearly, you have the markets which are now at the day's highest levels. Interesting moves that are coming in there. And if you talk about brokerages as well, I mean, Jefferies clearly has indicated that, the budget has continued the path of fiscal consolidation, albeit at a lower pace. In fact, they're expecting the FY27 deficit at around 4.2%, and the equity market would like relaxation, if any. Alternatively, the government could hold the deficit near 4.4%, and any capital gains benefits to FPIs will be a positive, though not our base case. And Jefferies has also said that they see gains from Kusum PLI, renewable energy and consumer durables will be beneficiaries. You have Morgan Stanley, where they're saying that the fiscal deficit to be set at 4.2% of GDP in FY27, and the focus on capex will help create jobs. The key themes will be targeted social sector spending and further structural reforms, and the market has been on a secular decline from here on. As of now, the market appears to be approaching the budget with skepticism, could be dealing with both volatility and upside risk post the budget. So this is key commentary that we're picking up from few of the brokerages so far. But let me go back to Sharad to see what the markets are looking like right now in terms of closure. Sharad, over to you.
Well, this is a very strong closing we are seeing for today. Nifty also at its day's high level, comfortably near the 25,100 mark, and that's a very important technical level. Same story for Nifty Bank. However, it is not that strong as Nifty's recovery, but nevertheless, we'll take it after what a volatile session we saw on the budget day. Largely broader index has turned even Stevenson. It's a very important recovery. Nifty mid cap is up 1.3%. Nifty small cap, let's say it's in the green. Yes, it's up 1%. These recoveries are big. Why? Because they have gone up almost 3% from the day's low if I talk about the small cap. Amongst the key gainers in the Nifty constituents, let's have a look over there. It's a sea of green. Power Grid leading the pack. Tata Motors, Adani group of stocks, all of them doing really well. Even your banking names, they have picked up. Amongst the losers, not much. The IT names are there. That's where there's a pressure. Shriram Finance, that's down 3% as well. But this is a day of recovery, rupee strengthening. And also let's see the sectors, how they have performed. A strong up move coming in most of the sectors, just especially the PSCs, the infras, the autos. Good set of contribution coming in. And remember, January auto sales numbers are also on the good side. What's not working is the IT space. That's only down almost 0.5% in the day's trade. Let's look at the advanced decline ratio to show you how the breadth of the market has changed. And look at that, just in the last moment we are seeing that advances have crossed the decline. So this is a very important trigger for the value buying for the next trading session, at least in the small caps. Apart from that, let's also look at the BSE 500 index contributors. But we'll get you all those details as well. And largely this day we have seen the impact on the OMCs doing really well, which we had mentioned. MRPL up 9%, Hindustan Zinc that's out 8%, capex guidance going up, that's what Street is expecting, 8% up there. And amongst the losers we are having Intellect Designer, PV Fintech, that's percent, and other stocks like BDL and Shriram Finance also making it to the list. So Hiral, it's a very interesting day of trade and the markets are ending at the day's high. What else can we want today?
Absolutely. Is this the FI magic or the DII magic is what we will get to know in the next couple of hours when the numbers do start coming in as well. So that's what markets have looked like. But an interesting update that we were taking you through, commentary coming in from Finance Minister Nirmala Sitharaman in a meeting that was held at Kartavya Bhavan. My colleague Shrimi and Rishabh are joining in with what are the key details that they've picked up so far post the press conference yesterday and today, this meeting that has happened. Rishabh and Shrimi, over to you if you could help us understand, because markets have somewhere taken few things with a stride of positiveness. We've ended at the day's highest levels. I'm sure there is something coming in.
Absolutely, Hiral, because she met on all the fine prints of budget, and this is a lot of clarification, and we are trying to, touch upon all the issues on which she clarified, and among those, the important one being on the custom overhaul, because this is in the context of what is going on with the US. Of course, she's saying that whatever the decision in the duty structure, etc., has no influence on custom duty overhaul. And in fact, this has been in the works for past 2 years. So that's what she emphasized. But on the STT, which is most takeaway from the budget yesterday, she said that, the government only tried to touch the speculative trading. It's only, related to FNO, the future and options, and not really across the segment. And she's actually highlighted the kind of concern she received from parents of children and the kind of study, Finance Ministry had on that 90% retail investor has actually lost the money, and that reasoning she gave on hiking the STT rate. On gold and silver surge, which of course one of the concern of government as well, she said that volatility exists because of the uncertainty in global markets, and that we have been listening from economists as well, expert as well. She's also talking about that this is kind of natural tendency. People move to rush to gold when they have, don't have trust on one currency. And she clearly said that, central bank globally are invested in gold. So that's important clarification coming at this point of time when you see a huge surge in the gold and silver prices. So that's one. And one of the important parts she said on the disinvestment, as we know that the stance of government has changed post COVID. In fact, they picked up a couple of proceeds earlier, but then they slowed down, and the latest one is of course IDBI. So the statement coming at this point when she's talking about that the government is certainly look at more on disinvestment and asset monetization. So this is important in the context of how they are going and keep the pace of disinvestment. Of course, it depends on the volatility in the market, etc. But definitely this is one of the major agenda on the government table, and she's going to accelerate the disinvestment is what sense we have got. It's important also, Hiral, she met around 80 journalists and the meeting went on for about 1.5 hours, and we are the first one to bring you the roundup because she spoke almost on all the topics what journalists have asked. Of course, it was an off-record briefing, but we tried to sort of put out the best possible and all relevant lines for our viewers, and ask
Absolutely.
Rishabh
In fact,
also,
exactly. I was just going to come to that anything that Shrimi has missed that Rishabh wants to highlight, because it's a whole host of information that's coming in from this off-cam briefing.
No, the rupee is also a big clarity, which Rishabh will tell you. Rishabh, tell me what she said exactly on the rupee.
Right. So with rupee, what the finance minister said was that she noted that it's a concern, the current levels. What she also said is that the RBI and the finance ministry are very much constantly in touch over those levels. Remember, the Eco survey had mentioned that an undervalued rupee hasn't hit any sort of sentiments yet. So this was an important clarification that came in from the finance minister. Another very important highlight of the budget was, of course, the FM's focus on banking. And that is something that she also clarified in terms of the roadmap for banking for India, the high-level committee that is set to come up for a banking vision for 2047. And what she told us that banks today are in a position of strength. Asset quality is very, very high as we speak. But she said that she doesn't want to leave it just there. She said that it is required that if India has a growth agenda for 2047, banks must support that. And that will come in the form of futuristic banks that also know how to leverage technology. She said that the high-level committee will also look into bank consolidation, and also the terms of reference for this particular committee will be drafted. So a bunch of very interesting commentary coming in from, and we'll continue keeping you updated with more and more.
Yeah, I mean, that's interesting commentary. Thank you, Rishabh. Thank you, Shrimi, so much for getting us this information. Absolutely crucial when the markets are ending at the day's highest levels with the clarifications coming in there. But completely out of time. Thank you for tuning in, and join us again for more market insights and updates with new shows that continue. Stay tuned to NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सब बस एक ही नाम, Yo Honey Singer. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo Honey Sing. This is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Hello viewers, you're watching Market Express on NDTV Profit. I'm Himakshi Bhavna. Let's get straight into the show and see how the markets have fared today. So Dalal Streets has shirked off the budget, skepticism as benchmarks posted a sharp recovery after Sunday's fall. If you look at the key indices, so they have seen over 1% rally in trade as Nifty has reclaimed the 25,000 levels, while the Sensex has also jumped near 1,000 points. Broader markets, if we look at, so they've also posted a sharp recovery after a volatile session, ending the day with 1% of gains. And sectorally, if we look at, markets have ended, the day on a good note as most of the sectors have ended with gains led by auto stocks, which has seen some strong moves on the back of a healthy January sales. And apart from the autos, oil and gas and metal counters also ended with good gains. Now, on the other hand, it was only IT stocks which witnessed some sort of selling pressure. Now let's look at day's key earnings. First up, we have Campus Activewear. So it has delivered a set of numbers this quarter. EBITDA margins, if we look at, they have expanded sharply, which is up from 16% last year. And if you look at the EBITDA has grown also 34% to 110 crores, while the revenues rose and touching 589 crores. If you look at the bottom line, so it was even stronger. Net profit has jumped 37% to 63.7 crores, and this is driven by improved efficiency and also healthy demand. And keeping it going with earnings, another stock that has reported a good set of numbers is Latent View Analytics, with profitability gaining solid traction. PAT is up 20%, reflecting improved operational performance and also healthy deal momentum. Among the segments, financial services have led the growth, continuing to be the company's strongest vertical as clients ramp up the spending on data, and also it has also led to transformation. Viewers, next up we have Intellect Design. So the third quarter earnings have disappointed the street expectations, with profitability taking a sharp hit. The revenues have slipped 3.5% to 731 crores, while the EBIT has tumbled a steep 55% to 46.9 crores, which is nearly 47 crores, dragging the margins down to 6.4% from 13.8% last year. So higher investments have also weighed heavily on the bottom line. Net profit has crashed 72%, coming in at just 28.4 crores as compared to 102 crores, last year. Now on to another stock that is under pressure. Bharat Dynamics has delivered a soft third quarter, with both revenue and profitability under significant pressure. Margins have slipped sharply, reflecting weaker execution and also cost pressures. EBITDA has taken a major hit by half compared to last year. The stock is also struggling, trading nearly 40% below its 52-week high, as investors react to the sequential slowdown and also margin compression. Yes, next up we have Sharda Cropchem as posted a strong third quarter, This is driven by sharp improvement in the profitability. Margins have expanded meaningfully, rising from 12.3% to 18.7%, and thanks to better pricing and cost control. Now, the upbeat performance has also lifted the market sentiment, with the stock rallying 27% since the results. So overall, a solid quarter that signals a performance. Next up, we have Power Grid. So that is powering ahead with a sharp upgrade to its investment outlook. The company has raised its FY26 capex guidance, lifting the target from 28,000 crores to a stronger 32,000 crore rupees. Now, the enhanced spending plan underscores Power Grid's confidence in accelerating transmission expansion and also supporting India's rising power demand. With this upward revision, the company signals a robust growth trajectory, setting the stage for faster project execution and also a more resilient national grid. Next up, we have Agrochem major UPL that has posted a strong third quarter with profit before tax jumping 90%. Net profit, however, came in at 52.2%, which is 96 crores versus 828 crores as the company had a tax credit in the same quarter last year. And if you look at the revenue, so they have risen 12.5% to 12,269 crores, and this is driven higher by the higher volumes and also supported by favorable forex. So EBITDA grew 18.5% to 2,317 crores, and margins have improved to 18.9%, which is nearly 19% from 17.9%. And a steady set in quarter three failed to cheer the investors when it comes to Hyundai Motor. Now, the company's quarter three net profit rose 6.3% to 1,195 crores as compared to 1,124 crores last year. Revenue was also higher, which is up 7.5% to 70,453 crores, and this is driven by continued demand across the key models. Operationally, if we look at, Hyundai has maintained its footing with EBITDA up 7.4% at 1,960 crores, while the margins have stayed flat at 11.2%, and this is reflecting stable cost structures despite market pressures. So overall, a quarter of steady growth for Hyundai, for both top line and bottom line inching ahead. Yes, next up we have Nuvama that has turned positive on Asian Paints as crude prices slide, easing raw material pressure. The brokerage is seeing some strong double-digit volume growth this quarter, helped by a more disciplined pricing environment and rival player shifts to a rational strategy. Promotions are rolled back, and also the new CEO focuses on healthier pricing. Valuations now look comfortable. In fact, the automakers have started the year on a strong note as January sales beat the expectations across most of the segments. Passenger vehicles gain momentum on the back of new launches, while trucks and tractors delivered a solid performance. Two-wheelers, if we look at, they remain mixed, with Royal Enfield falling short. Overall, the demand trends stay healthy, and this is led by commercial vehicles and also rural markets. Here's next up we have domestic air traffic. If we look at, so it stays on a steady climb with January some healthy year-on-year growth after a mixed run through last year. Passenger numbers have improved, both month-on-month and also annually. And this is led by domestic travel, while the international traffic has also picked up the pace. And if you look at the load factor, so they've remained strong even as capacity have, it has risen. And for Indigo, valuations continue to look reasonable versus long-term averages. Viewers, Bernstein maintains an outperform call on Bajaj Auto, raising its target slightly. The brokerage highlights strength in core business drivers, with weak areas being addressed. Exports remain a key bright spot, supported by recovery and also strong near-term momentum. Domestic three-wheeler sales are rebounding, while the electric scooters continue robust growth. Overall, a favorable valuations are providing room for further upside. And the oil marketing companies are gaining in trade as two key headwinds have eased. The union budget avoids any sort of hike in the petrol and diesel excise, removing a major policy worry. And at the same time, crude prices have fallen sharply amid the steady OPEC supply and also easing the global tensions. So overall, oil prices have lifted the market, marketing margins, and they've also improving the earnings visibility for the OMCs and also driving stock gains. Let's look at some brokerage notes. Jefferies have upgraded delivery to a buy from underperform and also lift its target very sharply. The brokerage notes that earlier headwinds around The insourcing are easing, helping the company deliver an earnings beat and lower integration cost in the e-commerce, and the strong growth in part, truckload volume support the positive view. With potential recovery in the broader road logistics, delivery looks better positioned. In fact, Bernstein has described the union budget as academic and largely lacking punch. Revenue targets look realistic and the divestment goal is sharply higher, but there are no immediate boosters. So higher transaction taxes hurt the sentiment, while expected capital gains relief is missing. So overall, the budget is seen as neutral for India, with Bernstein holding its market view and also expecting some sort of rebound after the recent sharp fall. And viewers, the tire industry is rolling into the budget year with optimism. The Automotive Tire Manufacturers Association has said that the government's sharp increase in the public capex to 12.2 lakh crores is a significant positive given how closely the tire demand tracks, the pace of road building, freight movement, and also overall infrastructure activity. So the ATMA says that future-ready infrastructure is spanning highways, rail links, logistics corridors, and also urban mobility directly fuels the demand across both passenger and commercial vehicle tires. So the association expects stronger replacement and also the OEM demand as transport activity up over the coming years. And looking at government bond yields now, so they have spiked to a one-year high of 0.78% after the union budget unveiled a record borrowing plan of for FY27, much higher than the market expectations. Traders say that the sharp jump in gross borrowing has revived the concerns about the debt supply, liquidity pressure, and also weak demand from the long-term investors. The rupee opened nice stronger, and this is supported by the reported RBI dollar sales in the offshore market, but remains vulnerable, after touching a lifetime low of 91.98 per dollar last week. So the net borrowing is set to rise to 11.7 trillion, while redemptions will surge nearly 70%. Analysts are expecting near-term volatility as global yields stay high, and also the RBI operations attempt to cap the rise. There's a sharp recovery was seen in the precious metal prices after gold and silver rally, screeched to a halt after running too far and too fast. So gold has cracked more than 10%. Silver has plummeted more than 16% earlier today only to recover sharply. So concerns over a stronger dollar, hike in the CME margins, and also drag that remained, two of the key headwinds. So however, with the safe haven demand intact on the back of geopolitical uncertainty, tailwinds for gold and silver remain firm, with silver rising above the $81 an ounce level. And looking at Bitcoin, so that has dipped below 75,000 rupee level in 9 months as traders reacted to broader weakness in the crypto markets and also increased the risk aversion among investors, according to market data. Now, the decline comes amid tightening liquidity conditions and also profit-taking pressure after recent gains. Analysts are saying that the break below key support levels could keep the sentiment subdued in the near term. And other major cryptocurrencies also posted some losses, reflecting a cautious mood across the digital asset space. And looking at India's manufacturing activities, it has seen a mild recovery in January, with the PMI rising to 55.4 from a 2-year low of 55 in December, according to the latest HSBC survey. Now, reading above 50 signals, expansion with faster new orders supporting output and also hiring. However, business confidence has slipped to its weakest level in 3.5 years as firms have remained, cautious about the future demand. Input cost, however, pressures, rose while the output price growth has eased, squeezing the margins. Domestic demand has remained the main growth driver here, though export growth has slowed. And India is considering the foreign direct investment limit on public sector banks to 49% to help attract fresh capital and also support growth, government sources have said. Now, the move is aimed at strengthening the banking system and also enhancing the lender's ability to fund the credit growth. Currently, the FDI limit in the PSU banks is lower than many private lenders, and also lifting that it could bring in the strategic investors. And officials have said that the proposal is under active discussion within the government, but no final decision has been taken yet. So the change, if approved, interest in the banking sector. Next up, we have Maruti Suzuki. So, it may be compelled to raise vehicle prices as commodity inflation continues to push up the input cost. So, Senior Executive Officer Partho Banerjee has said that precious metal prices have risen phenomenally. And while the company is trying to absorb as much as possible, a hike may become unavoidable. Maruti currently has 1.75 lakh of pending orders, and also January alone has seen 2.78 lakh bookings. And this is supported by strong demand after GST rate cuts. So Banerjee said that if costs keep rising, he said that the automaker will have to pass some of the burden onto the buyers. And the yen has weakened after Japan's Prime Minister suggested a weaker currency could benefit export-oriented industries, cooling the expectations of direct intervention to support the yen. The currency slipped 0.5% to 155.51 per dollar, giving back nearly half its gains from the last week. Now, Japan's PM has later clarified that she wasn't signaling policy direction. With Japan heading into a Feb 8 snap election, traders are expecting volatility to remain high. Moving on to some national news now, External Affairs Minister S. Shankar has embarked to the United States, a trip seen as crucial to stabilize India-US ties after months of strain. He'll attend a Washington-led ministerial on critical mineral supply chains hosted by U.S. Secretary of the State Marco Rubio, with a focus on clean energy transitions and also strategic mineral cooperation. Jaishankar is also expected to hold the bilateral talks with senior members of the Trump administration. Relations have been under pressure after the U.S. doubled tariffs on Indian goods, alongside tensions over the Russian crude immigration changes and also Trump's claim of diffusing the India-Pakistan conflict last year. Now, this visit is being closely watched for signs of reset in the partnership. On to some more national news. The Supreme Court has granted bail to 3 accused in the 2024 Pune Porsche crash case that killed 2 people. While hearing the matter, the court has observed that parents must bear the responsibility in incidents involving juveniles. The bench has noted the broader issue of accountability in the cases of reckless driving by minors. The accident had triggered nationwide debate on juvenile justice and also parental liability. The case will continue to be heard on the lower courts. In fact, US President Donald Trump has said that he still hopes Washington can strike a deal with Iran even as tensions spike across the Middle East. Speaking from Florida, Trump has highlighted the scale of the US naval deployments moving very close to Iran and also insisted he preferred diplomacy but warned that if no agreement is reached, the the world would find out whether Iran's supreme leader was right in saying as a US strike would trigger a regional war. His comments follow new warnings from Khamenei, who said any American military action would spark a wider conflict across, and has repeated that it is not seeking war but would respond forcefully to any attack. Trump, however, has maintained that Tehran appears open to talks and also suggested a timeline has been set without providing details. And viewers, on to some sports news now. Pakistan has decided to forfeit its T20 World Cup match against India, turning the tournament's biggest fixture into a major flashpoint. Now, they're going to play the event in Sri Lanka, but ordered it not to take the field for India clash on 15th of February. Now, the ICC is now assessing the fallout, with reports warning of financial penalties and also sanctions if Pakistan skips the marquee game. Now, India will receive full points if Pakistan does not show up. And Dalai Lama has won his first ever Grammy Award at the age of 90, receiving the honor in the Best Audiobook Narration and also Storytelling category for his spoken word album Meditations. So the reflections of His Holiness, the Dalai Lama. Now, the award was announced at the 68th Annual Grammy Awards in Los Angeles. Now, the Tibetan Spiritual Leader Project, which compiles and also meditative guidance, was widely praised for its clarity and also contemplative depth. Now, in a message reacting to the win, he has said that he was grateful and described the honor not as a personal achievement, but as a recognition of universal values like peace, compassion, and the oneness of humanity. And his album beat several high-profile nominees, including Trevor Noah and also U.S. Supreme Court Justice Ketanji Brown Jackson. Well, with that, viewers, it's a wrap on this edition of Market Express. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Nageswaran clarifies on FNO STT hike, and the budget says the purpose of increase in tax is to ensure that savings money is used, maximized wealth in households. Cites SEBI paper that pointed out how people lose money through FNO. Ramdev Agarwal believes the STT hike on FNO transactions was a disappointment, says the timing for this increase may not have been good. Market ends over 1% higher as it paired the opening losses as Nifty closes above 25,000 while the Sensex gains more than 900 points. All sectors barring Nifty IT finish in the red. Most auto companies beat sales estimates. Royal Enfield division falls short of street's expectations. Growth momentum continues with strong growth for the tractor segment. Maruti sees stellar month. Rupee closes 91.51 against the dollar after posting the biggest single-day gain in 6 weeks. Reports suggest RBI intervened through dollar sales in the offshore market to support the currency. Gold and silver bounce back in trade. Silver recovers 14% to $81.8 an ounce, while gold rebounds 6% to $4,721. Finance Minister addresses the volatility in gold prices, says it's due to global uncertainties, and adds that she is seeing natural tendency to rush to gold as there's not enough trust in one currency. External Affairs Minister S. Jaishankar is set to visit the US between the 2nd and the 4th of February to participate in the Critical Minerals Ministerial convened by US Secretary of State Marco Rubio. This meet will focus on supply chain resilience, clean energy transitions, and strategic cooperation in critical minerals. Hello and welcome. A warm good evening. This is Profit 360 on NDTV Profit and I am Malika Mishra. Along the next half an hour, we'll be taking you through some of the latest updates as well as international news, along with national stories as well. Let's begin with focusing on Finance Minister Nirmala Sitharaman's comment as she clarifies on some of yesterday's budget announcements. While speaking at a briefing, she said that STT hike only applies to F&O, which are highly speculative. She added that studies say F&O losses have impacted children. On the volatility front in gold prices, she said that it is due to global uncertainties that this has happened. So let's go across to my colleague Shrimi Chaudhary as well as Rishabh Bhatnagar for what transpired in this briefing. Shrimi and Rishabh, over to both of you.
Well, absolutely a very important briefing post-budget, and she clarified, FM has clarified a host of issues, and of course she also addresses the elephant in the room, which is STT hike, the most talk about, key takeaway from the budget. And on that, as you rightly mentioned, she said that, the government has only touched upon future and options and not across the segment. So that's one. And the kind of complaint she was receiving from parents about how children are getting involved in F&O trading and how, the 90% money in F&O. So these are the concern. Actually, she was giving the reasoning behind hiking the F&O, STT on F&O. Then moving on to subject like disinvestment. Again, disinvestment exercise has been taken by government. In fact, we have seen approvals from cabinet on some of the proceeds, important proceeds like IDBI Bank, which is, in progress. And she talked about on those aspects, and she said that the pace and direction of disinvestment will set the tone of revenue generation, and she will certainly look at more on the disinvestment as and also asset monetization, and looking at more public float by central public enterprises. So that's important one coming in at a time when there are a lot of chatter around, government changing stance on the privatization. Then she also spoke on the custom duty overhaul, because all those changes in the rates on host of item, duty exemption being given to, textile, leather, etc., and also to nuclear power project. The talks have been that it's been given to have greater access to US market. On that, she said that the decision has no influence, on the US steep tariff. And in fact, this has been in work for past 2 years. On gold and silver, she clearly said that it's the gold volatility is due to the global uncertainties, and people are, not kind of trusting on one currency. And in fact, all globally, central banks are investing into gold and silver. And the consolidation part, because as the consolidation path has been where she tries to be on course, 4.5% is what the target, and she managed below that, which is 4.4% for the current financial year. She said that it's moving in a right direction. And in fact, on the expenditure tightening, this time it's kept at 53 lakh odd crore, 6% hike, which is a slightly unusual, because every year expenditure target is always raised by at least 10%. So this was somewhere a constraint, but on that she said that it's not been compressed. So that's also important clarification. Path as well as the expenditure. Now, I'm tossing to my colleague Rishabh. He's going to tell you more on other issues as well, rupee as well as the IBC amendments. Rishabh.
Absolutely, Shrimi, what we picked up on the rupee from the finance minister was that she acknowledged that it's been a concern and that the finance ministry and the RBI are in constant touch for in terms of monitoring the levels of the rupee. So an important sort of, I think the first time she's speaking post-budget on rupee levels. What we also saw was banking. I think that was a major feature in the budget, and what she said on the roadmap for banking was that banks are at a all-time sort of high in terms of quality assets. That needs to not be left there and continued. So that's why there's a high-level committee that's been set up, and they will sort of look into bank consolidation as well. Very important clarification that on buyback taxation, the FM was very clear that it is the minority shareholders that needed justice, and that's what they've sought to do with this particular regulation. On the IBC, again, the select committee report on the IBC amendments has been reviewed, and the hope is that it will be moved in the second half of this current ongoing budget session. So another very interesting thing to look forward to. This is the second half would actually be around the 19th. Then there's also she was asked whether, given the fact that there's so many high-level committees that the government wants to start off, is that a question on the confidence levels within the government? To that, she said no. It has nothing to do with the sort of levels of confidence within the government on how it is functioning, and all these policy decisions are taken very much basis stakeholder consultation, and this is a part of that process. Lastly, she also said the new financial instruments for asset monetization. Very interestingly, she mentioned REITs and InvITs. She said that these are tried and tested methods, and they will continue to bank on these. India's sovereign fund NIIF has also backed REITs and InvITs into believing that these are solid investment methods that even foreign investors trust in. So an important set of clarifications and a lot of new points coming in from the finance minister post-budget, and we'll continue tracking as we keep sort of unlocking more and more from this budget.
Much, Shrimi and Rishabh, for giving us those highlights from Finance Minister's briefing on many aspects such as STT tax, F&O trading, buyback taxation, and a lot more. So much needed clarity on that front. But viewers, there's no doubt that STT hike on F&O has grabbed a lot of attention since its announcement in the budget speech yesterday. Hence, it's important to understand what the government's intention really is behind the move. And it turns out that in CII's post-budget interactive session, Anant Nageswaran, Chief Economic Advisor, clearly drew the line between revenue generation and saving hard-earned money of Indian households. He said this step is in fact directed to maximize household savings and wealth. Listen in to his explanation of the same.
On the STT, it's important to look at it not as on the short-term transaction tax on futures and options. It is important not to look at it as a revenue generation measure. In 2025, the government restricted online gaming activities, and this is only confined to futures, and the government was interested in using it as a revenue generating measure. Please do recall when the capital gains tax was, long-term capital gains tax rate was increased to 12.5%, the government made sure that the first 1 lakh of capital gains was excluded from taxation, and that number was raised to 1.25 lakhs. 90% of the capital gains taxpayers actually have capital gains of less than 1 lakh. So they were exempted from tax. So the purpose is not revenue. The purpose is to make sure that the hard-earned savings of households do stay with them.
And it's not just the CA who spoke on F&O. In an interview with NDTV Profit, Ravi Agarwal, the chairperson of the Central Board of Direct Taxes, spoke on the fundamental issue of derivatives trading. He said that retail investors lose money due to the speculative nature of trading in these securities.
We have discussed various options that could be there to address this issue, but the fundamental issue on which the proposals rest is one, steep exponential rise in the volumes. This is okay. But at the same time, the transaction being speculative in nature and the retail investor largely losing money in this exercise, that is a cause of concern. See, so far as business is concerned, this I would say the tax also is claimed as a business expenditure.
And now shifting gears to the Indian market action, the Sensex and Nifty rebounded after early losses a day after the budget rout triggered by higher STT on futures and options. The Nifty 50 crossed the important 25,000 mark and gained over 1% for the day. Broader markets joined the rally with Nifty Mid-Cap 150 rising over 1% as well, while Nifty Small-Cap 250 gained over 0.5%. And almost all sectors ended positive, barring Nifty IT. So to get us insights on what pumped up the market's overall sentiment and the intricate details on the biggest losers and winners, let's head over to my colleague Varsha.
Well, yes, Nifty crosses the 25,000 mark. Broader markets gain in trade along with Nifty. Nifty Mid-Cap 150 gain over 0.5%. Well, Power Grid and Tata Motor PV gain the most when it comes to Nifty 50. Power Grid leads the gain up 7% in trade today. All sectors and in green barring IT. Infosys and LTI Mind, Nifty IT, Nifty Auto gains the most. Nifty Auto, Nifty Oil and Gas, Nifty Metal up over 2%. Tata Motor Passenger Vehicles and Minda gain the most when it comes to Nifty Auto.
Thanks so much for that, Varsha. And keeping our focus studded on the union budget, we spoke to some prominent market voices on the government's fiscal policy. While Sameer Arora of Helios Capital believes that rupee depreciation called for a different approach to certain decisions, Neelkant Mishra of Axis Bank expressed skepticism on financing the fiscal deficit. Ramdev Agarwal of Motilal Oswal in the interim, in fact, went all out and said that STT hike made no sense. But Rajiv Batra complimented the comeback of double-digit nominal GDP growth, signaling that it reflects a secure economy. Listen in to all their remarks.
It reflected that what has been happening in the stock market in the sense of massive underperformance and currency underperformance, that in that environment to do this just looks more like a priority of the government is not there or something like that, rather than liquidity also it might matter. But you see all these big mutual fund guys in India come on your channel and say that it was all good. So who am I? I'm the smallest mutual fund in the country. If they can handle liquidity, we can handle it. And I don't think that instantly people will make that as a negative. But I think it was more to show that in an environment where anyway we are underperforming on both currency and this thing, to do this to the same sector in that sense, I felt was a negative.
If I was to highlight a concern that emerged, which is where I think the conservativeness that the government has used in projecting a nominal GDP number or the tax projections, I think the extension of that on the financing of the deficit. So if say 17 lakh deficit, how do you finance that? And I think the assumptions made are at risk of undoing the remarkable fiscal discipline that we have seen. So there are some assumptions made which actually make no sense to me, or very little sense to me. And as a result of that, the gross market has turned out to be higher than what the bond markets expected, and yields have actually gone up when they should have been going down.
Brilliant job, but communicated very badly.
Okay.
I mean, particularly the stock market guys. By doing that, 10-12,000 crores is nothing in this size of the budget. 50-60 lakh crores you're talking about. You're talking about Viksit Bharat. You're talking about tax break for 22 years. I mean, such big things are there in that. Small thing, spooky thing, STT, this. I think that was mindless, but otherwise it's a brilliant budget.
Budget is, we should not see it only arena where big bang announcements are going to be made. Look at the last year example, be it the announcement on the GST, be it on the measure of reforms on the labor side, that were all done even outside the budget. Budget, you have to take into account, it's also like an accounting exercise where you will get the big picture over there rather than just for one fiscal year only. The good news on the one fiscal year, which is getting overshadowed by this STT hike is nominal GDP growth forecast is being given at a double-digit handle. Remember, for this ongoing fiscal year, it's a stretch even to hit a 9 mark, and that shows up in your revenue growth and earning growth also. If double-digit nominal growth is making a comeback, then your revenue growth, which is also following your nominal growth, will also follow that particular mark. That keeps you in a safer terrain, like earnings will follow.
And it seems like that auto majors have marked a strong start to the year. Almost all major automakers have beaten estimated figures of their January auto sales. Though an exception in the positive ride was Aisha's Royal Enfield division, which came in below expectations. But overall, truck and tractor makers had delivered a solid beat. My colleague Puneet now joins us with a detailed breakdown of all the auto sales figures.
Well, it was a very strong month for the month of January in terms of auto sales data, and that largely reflects in you have followed through. Largely a month where estimates were beaten, especially in the passenger vehicle and the car market. But let's start with the two-wheeler space there. While Aisha Motors was one of the companies which missed estimates, they reported roughly 1.04 lakh units versus estimates of 1.07. It's still a 14% growth that they've shown, but a 29% growth for TVS Motors is one of the most shining stars in that two-wheeler space. They reported sales of 5.1 lakh units versus estimates of almost 4 lakh 91. So shows you the strength. In terms of Hero MotoCorp as well, another strong month, a big beneficiary of the GST rate cuts. A 26% growth is what they've shown, and you can compare with the estimates as well, very visible on your screen right now. In terms of the passenger vehicle space, while Tata Motors was one of the companies which was expected to have a very strong show, we are working with a number of almost 61,000 units. The company has come out with a 47% growth, showing 71,000 units. A big beneficiary of the Tata Sierra and the units which are benefiting the company in this aspect. But even Mahindra and Mahindra, we were expecting a growth of 10%. They reported a 25% YOY growth at 63,000 units. Maruti as well has done well, beaten estimates by almost 10,000 additional units. The Victor is crossing 50,000 units, shows the strength of the car market post the GST rate cuts. On the other hand though, there is the tractor space and the commercial vehicle space. In trucks specifically, it's been another strong month for the almost a 20% growth for all three companies, Tata, Ashok Leyland as well as VECV. In tractors, the momentum just refuses to stop with over a 45 to 47% growth for Escorts and Mahindra & Mahindra, continuing that momentum. So overall, a beat across metrics. 8 out of 9 companies that have come out with numbers have done so well in this particular month, and the continuation going into Q4 suggests that the momentum is here to stay.
Thanks so much for that, Puneet. And let's now put the spotlight on the Indian currency that appears to have taken a bit of a breather from its consistent fall. And I say this because the rupee closed at 91.51 against the US dollar after gold and silver's rally screeched to a halt after running too far too fast. Gold cracked more than 10%. Silver plummeted more than 16% earlier today, only to recover sharply. My colleague Shreyansi, who closely tracks these commodities, joins us with more details on what really sparked that rally.
Well, absolutely. You've seen quite the recovery coming in when you talk about gold and silver prices. So when you talk about gold particularly, you do have prices that are down right now about 3.2%, but above that $4,700 an ounce level. Now, when you talk about silver as well, that has also had a very stellar recovery coming in. So 3.8% downtick is what you're looking at for silver, and it was previously down 16%. Gold was previously down 10%. So you can totally make out the magnitude of the kind of recovery that you've seen coming in when it comes to both of these metals. When you talk about the triggers, though, you do have a lot of volatility that is still persisting in the market on the back of the CME margin hike. Let's talk about that as well, because that's the number one trigger why you've seen such a choppy session in trade coming in when it comes to gold and silver. You do have CME Group that has raised margins when it comes to COMEX gold and silver futures, and that is something that you saw being reflected very clearly in the prices. Now, when you talk about some of the other factors as well, yesterday's key tailwinds, in fact, are the headwinds right now. You do have de-dollarization, number 2 on the list. In terms of triggers, you do have a stronger dollar and also an indication of a stronger dollar that has actually weighed on prices quite heavily. Now, when you talk about the third factor, you do have debasement trade, and that reversal, that unwinding, in fact, is something that you're seeing very clearly being reflected in prices, because those concerns about Fed independence are pretty much no longer there, and you can see that being reflected in prices as well. So that largely is the backdrop as well. Why it's going to remain volatile from here on is because you do have supply fluctuations on the back of the waves of hot money in China, also contributing to that domestic supply tightness when it comes to Beijing. So that's something that you're looking at in terms of factors as well going forward. And there's also speculation around higher premiums versus spot prices. So do keep an eye on the entire precious metals complex.
Thank you so much for explaining those triggers to us, Shreyansi. But on that note, viewers, we've reached the end of this edition of Profit 360. But I do urge you to continue watching NDTV Profit to stay ahead of all the news and updates. Thanks for watching.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, and today I'll be giving you some more hints for the company which will be addressed at KYC. Some hints. Of course, the first hint for the company is it's an auto ancillary company. Wide definition, let's narrow it down a bit. Let's look at the second hint, what it is. It is a strategic JV with a Japanese company. This is a big hint I have given you. And you must be wondering, and it's quite easy to guess, but important thing is it's in the wiring harness segment. Now this becomes very easy to guess, it seems. But apart from this also, the company has been in news because of its earnings also. That's what we will be tracking. And the company in focus is going to be Motherson Sumi Wiring. That's the company I'm talking about. This is the company where it is, which will be in focus. And remember, we'll be asking the management also about the key details, the growth strategies, and also importantly, how the industry is faring when you compare the Indian-European trade deal as well. But why the company? Why are we getting this company? First one is the Q4 sales outlook. After the GST rate cuts, will we see these numbers actually going up? Because remember the Q3 numbers which we spoke about, they have been really good. So will this momentum continue? The second one is the benefits from the Indian-European Union trade deal. The company is already having a strong strategic JV partner. Spoke about it. It is Sumitomo. Now remember, these are companies which are having good supply chain systems in Europe also, and there might be some more benefits coming in. Another is the cost impact on the new plants. The company is undergoing plant expansions also. That means on the balance sheet, we might see some kind of a margin pressure as well. Return on ratios, the company is having a high return on ratios. So that means in that way, these numbers might come on the lower side. But why the volumes have dipped in the Pune plant, that's also a concern. We will be asking the management. And lastly, the progress on the completion of the Navagam plant. Will it get completed in the fourth quarter, or will there be a delay? These are the key queries, which have come in from a lot of investors who keep tracking us KYC in the social media and TV, and that's what the request has come. On the show, we are having two people from the management. There is Gulshan Pahuja, he is the CFO of the company, he will be there. And apart from this, Anurag Gehlot, he's the COO, they will be joining us. So Anurag would be there as well. But let's move on and give you some more details about the company. I've given you largely the entire picture about it. It's a JV, there is Sumitomo involved in it as well. The numbers have also come out, but largely has the company given that benefit to the investors, and that's why we get these companies in KYC to give you much more details about what the company is actually all about. Now they are having a full system wiring solutions, and they provide that for the Indian OEMs. India OEMs is original equipment manufacturers, and they have established following the demerger of Samil's India wiring harness business. So there was a demerger earlier from the group itself, and that is where the value creation definitely comes in. But has that actually impacted the stock? That's a query to be asked, and maybe on the lower side is something what the investors have told me. Apart from this, the company operates as a JV between Samil and Sumitomo Wiring. This comes after the demerger. There is a JV has been made, and these are the key details about it. There, one of the core products is the wiring harness systems. There's a lot of bunch of wires which are there. So they actually accumulate them and then they install them in their important, you could say, the engine systems. But how the revenue mix looks like, definitely the passenger vehicle, that takes around 60% of it, and that's what I was talking about. That's the majority of it. But it's nevertheless, it's not just passenger vehicles. There are other smaller segments also which would be in focus. The second biggest is the two-wheeler segment, and apart from that, they are also in commercial vehicle, agri and other segment as well. A very important part of the auto component, and if the auto cycle goes up, there's an indirect beneficiary in this segment as well, and that's what Motherson Sumi Wiring is all about. So this is what the entire details which I have given when it comes to the wiring setup, how about the company looks. But our setup is also very much important. The KYC setup, 8 of parameters are there where we'll judge the company. The first one is the income statement. That's roughly, you could say, the last 3 to 4 years CAGR numbers in the balance sheet PL. That's what we'll judge the company. Balance sheet, we'll check whether the debt equity ratio is fine. Is the cash balance good enough? Cash flow, most important thing, and it's just like a heartbeat of a company. That's what we'll be tracking. Return ratios, ROE and ROA, is it on the higher side? Shareholding, any institutional movement in last 3 years or so? Street cred, has the stock actually made returns for the investors? Valuations, we'll compare them with the peers, and the outlook for the industry and the company. I have combined them both. So these are the 8 parameters where I will judge the company. The first one is the income statement, and remember the Q3 numbers are also involved in this, and largely the incomes has been stable for a company size like that. The revenue 3 years CAGR, that's what you're seeing here, that's around 18% up, and the top all the EBITDA numbers and the PAT numbers, that's decent, 11 to 14%. But yes, investors, they always ask, "Ye dil mange more." Is it there in Q3 performance? Well, year-on-year basis, whenever we judge a company, that's what you do for an auto ancillary. So sequential numbers are not that important, but the year-on-year numbers are strong. Of course, some kind of a dip is definitely there in the margins, but it's not that relevant. 26% growth coming in top line, and that is something which is coming good. But the margin trajectory over here, it has been changing all around. But in FY24 it was 12.2, 10.7, now 9.1. Now the question arises is the product mix changing, or is there any other reason coming in that we are seeing such a low margin profile? That's where my concern comes. But top line has been good, and that has been stable, and that's what works in the favor. Let's just pull up the Q3 numbers to give you that entire picture that how changes have happened, but year on year basis it's decent. So a neutral rating comes in when it comes to the income statement. Now let's move to balance sheet. That's the second one, and largely remember the company is demerged. It's already a lot of DD has been done. It's coming from a very strong parentage. A JV is also from Japanese company. So a lot of big concerns you won't find in a balance sheet like this. Roughly it is stable, and if you look at the numbers, the borrowings is literally negligible. A working capital kind of a numbers is there. And one thing is good is the cash bank balance, that's healthy also, 238 crore rupees. Nothing great about it, nothing bad also about it. So that is why I have given a neutral rating when it comes to the balance sheet. But income statement, balance sheet, we spoke about, both of them have got a neutral rating, but you should be looking out for cash flow. If you are an investor or a student of the markets, that's very much important in any business model. But that's where my concern comes. Look at that. Earlier, this number was a strong one, cash flow to PAT conversion, but that itself has come down. It's around 60% odd. And then cash flows over here, it's down on almost 153 odd crore rupees. We expect to see some good cash flows coming back in the company, and this is the numbers I've taken just till FY25. Of course, the 9-month FY26 numbers will be also much important, but company is coming from restructuring and now they are expanding also. So there are flows coming in. So I've given you the reason also why it's down. But nevertheless, cash flow is something you should be checking, and I have given this a thumbs down when it comes to this segment. But return ratios, let's see what happens here. And largely we see the return ratios are very strong. The ROC number, the return on capital equity, is talking about all of them. You see each year that is up 40%, and that is showing a good strength as well. Even the 9-month numbers also we calculated that was above that 40% mark. The ROC numbers are very strong. So because of that, I will be giving a very strong thumbs up for an auto ancillary company like Motherson Sumi Wiring. And the same story goes for return on net worth. All of them are comfortably up. A very high return ratio is something which the company is commanding. But let's come back again and let's talk about the shareholding pattern. It's very much important. Let's see how the institutions work, DIs, FIs. Let's pull up the last 2.5 years. Remember how the shareholding pattern has moved. The shareholding segment, the promoters is largely stable, nothing to look at. But over here also FIs, DIs, nothing much has changed. It's looking almost stable. And if you get into the granular details, maybe 1% hike coming in for the DIs as well. But largely a stable balance sheet, a stable shareholding pattern, and that is why I give this a neutral rating when it comes to the shareholding pattern. But let's move on to a very important segment, that's the street cred. When I talk about the street cred, it is nothing but the shareholding returns which you have got, be it a 1-month shareholder, 1 year, or even since its listing, or in this case the demerger. Nothing has happened major. If you are a shareholder, the stock has tested your patience and hasn't given much return at all. 1 year is just 12%. That might be the only silver lining, and that's where the concern comes. Let's pull out since its listing what has happened, and remember this listing data is nothing but the demerger part, and nothing much has happened. It's just 43%, and it's more than 3%. You could say almost 4 years kind of a history is there, and 4 years around this number is dismal. So because of that, I have given this a strong thumbs down when it comes to the street cred. Also, let's talk about the valuations. Auto ancillaries generally command a higher premium when you judge them, but they have corrected the way the cycles work. But there is a kind of auto sector doing well, where auto ancillary comes with a lag. So auto stocks have gone up, their valuations have gone up, auto ancillaries do a catch up, but definitely there are supply chain issues at times as well. But the 12-month forward P ratio, Motherson Sumi is 33 times. You compare that with Uno Minda Bosch, that's on the higher side. Look at that, 40 plus P coming in. But there are 2 more auto ancillaries in my analysis I would like to point out. If you could just show the other 2 as well, and then compare that with Motherson Sumi. Only Endurance Tech is cheaper when I compare that with Motherson Sumi. Sona BLW highest, almost you could say 38 times. Now all of them are auto ancillaries, and auto ancillaries are very different products which come in the car which you drive. But net the valuations are cheaper, and because of the stock correction which we saw, and stock not being a big multi-bagger even after the demerger, value not chasing this stock, and that is where this valuations become attractive. And when valuations become attractive, our KYC ratings also become strong. So we have given this a strong thumbs up. Let's talk about the outlook. Outlook is very much important from the industry perspective and the company perspective as well. Navagam plant That's expected to be completed by the fourth quarter of FY26. We will be asking the management, is the timeline right or not? Higher copper prices, that impact needs to be seen. Are they hedging it right, or is that going to hit? Because wiring is there, and when a wire comes in, 30 to 35% of the cost of the wire comes from copper segment. The more opportunities after the Indian Union trade deal. Will the global trade setup change? China is doing a lot of work. Now, will that benefit India after this India-EU trade deal? That's what we'll be watching out for. The Q4 momentum is strong, as we saw in Q3, and the GST cut rate boost revenue is continuing in the industry, and there is a second order effect when it comes to the auto ancillary space. And of course, the capex plans for 2026, 3 or 4 plants are already in the greenfield stage, so we'll be looking at that amount which is there. That's where the focus would be there. So let's give in the numbers. Outlook, of course, is a neutral rating because a lot of developments are happening. And income statement, balance sheet were decent enough, you could say. Cash flow is a big concern for me, but return ratios of such a high, product line which they have, a high value product line, and that is why it's doing well. But let's see what the street cred is all about. Street cred, nothing much returns if you're already holding, this position in this stock. If you're an investor, shareholding has been neutral. There is a decent participation in the FISDIs. Valuations are very attractive, because nothing has much happened. The earnings have moved up, but the stock price hasn't, and that's why the reason is here. Outlook, it's decent. It's work in progress. Let the greenfield initiative start coming in after maybe 1 year, 2 years. The benefits start coming in the balance sheet PL. But yes, it has tested the investors' patience. The total KYC rating for Motherson Sumi wiring is 4 out of 8. That's what we would be giving. But just to get more clarity in our analysis, we will be looking at the overall management. We are now joined in by Gulshan Pahuja, the CFO, and Anurag Gehlot, the CEO of Motherson Sumi as well. Anurag, my first question for you is that the broader growth has been seen in the auto space, led by the GST cuts. They have boosted the revenues for you. But what's like the momentum is for the fourth quarter? Will it continue going ahead?
Yeah, as you've seen the Q3 results, it has 25% year-on-year growth has seen, and the way Q4 volumes are going up, I think we will be. It will be the good quarter for us as well. I think MSWIL has done highest ever quarterly revenue in Q3, and I think. If everything goes well, I think we'll beat Q3 also in Q4.
And Mr. Gulshan, hi, Sharad here. The cost impact on the new plants, what kind of margins or profits can you see an impact on it, and by when can this stabilize?
See, if you see quarter on quarter in terms of the greenfield plant, there's an improved performance. The startup cost, or in fact the losses, I would say, it has gone down in the current quarter. And as soon as the plants gets operationalized, like Kharkhoda is getting ramped up by end of this quarter, and one of the other plant is also going as per the plan, whether the SOP will come in this quarter. So the things are very good in place in the coming quarters. And if it is stabilized, I think in terms of the margin, it will go better at overall basis. So even if you have to see the performance of the existing units, our profitability remains stable the way we were earlier, if we exclude the impact of the higher copper prices.
And Gulshan, the copper prices have been impacting the industry. What kind of hedging practices are there? Because generally there is a significant amount of costing comes in a copper prices in the wiring system we talk about. So what are the practices here?
Yeah, so currently we have the understanding with our customer that whatever the prices have gone up, they got it compensated from our customer side. So it is back-to-back arrangements. One is copper and the second is the currency fluctuations. So I'll pick up the copper. But there are always the lag impact which is there in our profitability, because it will take some time to get it recovered from the customers, because our prices have been fixed with respect to the previous quarter, and we procure copper at the current prices. So it always takes some time, like a quarterly impact, or for some customer it is a 6 months impact.
So that impact is temporary not sitting in our profit and loss, which is impacting the profitability, which you have seen. If you just and it is a back-to-back arrangement only where we get it compensated from the customers. So impact is there, but in the short term is there. But yeah, in the long term, it gets neutralizes by compensating from the customer side.
All right, so 3 to 6 months is the lag. Our viewers, you should know that because a lot of industries, focus on the copper space and the copper prices are on the high path. So that's where the concern comes. But coming back, Anurag, let's talk about the automotive landscape. What happens after the India-European trade deal? What changes happen?
I think we are already supplying to all the OEMs in the country, and we have relationship with these customers more than 4 decades. Any new customer coming to India also, we are very much ready. We are a Indian agnostic, supplier of wire harnesses. We have a strong parentage. One side is Samil, so second side is Sumitomo. So we are a very future-ready organization to take care any of the new customer, any new requirements, or any new technological upgrade which is going to happen in wiring harness. We are very much there. So if this trade deal is going to bring something new opportunities for us, we are definitely ready into the domestic wiring harness business in India.
Right, and just to give the perspective for our viewers, we could say that roughly 40% plus market share is coming in this space, which is the wire harness we're talking about. But Anurag, the plant, the Navagam plant, is it on track for fourth quarter FY26?
Yes, it is. As we are speaking, it is right now onto the ramp-up stage. This is a powertrain for EV and ICE both. And another model is for EV, for which volumes are ramp up right now. So I think this is very much as per the plan.
Interesting. Gulshan, the Pune plant, that has seen lower volumes. That's what anticipated, what the street was there. But what are the key reasons for it? Why the volumes are on the lower side?
See, there is no specific reason. We are customer-driven auto installers, so these plants are dedicated. So when this plant was set up, it was supposed to cater to a certain volumes where with the customers have provided us to at the beginning level. So if I just break into two parts, the one has already been, it is very clear from the customer that the volumes are a bit lower side, and it will take some time to get the volumes which have been forecasted earlier, right? So it will take some time. And with respect to the other plant in Pune, I think it is a bit delayed, but the volumes will come up. So that's the confirmation we have from the customer. So I think it is just wait and watch for like 1 or 2 more quarters when the volumes will be back in from the customer side and will be fully operationalized. Yeah.
Well, that's the management speaking about Pune, and it's going to take 1 to 2 quarters, and then the customer has said that the overall production will go up as well because they're going to give the order to the company. So that's pretty much interesting. But yes, 1 to 2 quarter of overhang is there. But Anurag, CapEx plans for 2026. There are 3-4 greenfield projects lined up. We spoke about Navagam also. But the CapEx amount for 2026, 2027, what is it looking like?
Yes, as of now, customers are giving their requirements. We are just populating all these requirements, looking after for the next year, which is 26-27. And you will hear us very soon about in case there is some new plant has to come up. But yes, we are working on these capexes, and they will be into the same value around what it is in this year.
All right. Thank you very much, Anurag and Gulshan, for taking out your time and giving the views and addressing a lot of concerns which are raised for our viewers, also for this company. Thank you very much, gentlemen. But let's revise, what management has spoken about. Of course, 1 to 2 quarters more of work will be coming for the Pune plant. And, interestingly, that pressure which is there on the higher copper prices will continue as well. So it's a very mixed commentary, to put it very easy perspective. In our analysis also that has come in the KYC ratings, let's see, income statement, balance sheet, it's been neutral here, and I've taken Q3 numbers as well. Cash flows, that's where the concern comes whenever these issues happen, so we have given a thumbs down for it. Return ratios are very healthy for a business model like that. 40% plus of ROC numbers are there. Return on net worth also really doing well. So the quality is strong. Parentage can't be questioned. Really good parentage is there. Motherson Group, Sumitomo is also there in this, and they are a market leader in what they are doing. It's just a matter of the cycle coming up so that the auto ancillary comes up. Street trade, nothing much has come into the returns, and that is where the valuations become very attractive. Something like in the early 30s or late 20s kind of a valuation coming in this stock, and that is where long-term investors might have a jibe at this stock. But outlook, net, it's neutral, it's a work in progress, and of course there's a lot of industry involvement with the raw material and supply chain management changes services as well. Indian-European trade deal is something which all the auto ancillaries look, so you should be studying this entire ecosystem. And yes, India's auto ancillary story is there, and it's really doing wonderful. We saw that in the budget as well. The KYC rating for this company is even Stevens from our side, 4 out of 8. So this is the entire picture for Motherson Sumi Wiring, and that's all, folks. Thanks for tuning in to KYC only on NDTV Profit. And any kind of queries you have on any companies, you can mark us in the social media, ndtvprofit.com, and you can ask for the companies which should come here in this show. Thank you very much.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह दिस।
Hi, welcome. We're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. We just got done with the presentation of the Union Budget for FY27, that is the financial year culminating in March 2027, and there were several key takeaways. Of course, a large focus was on the increase in the securities transaction tax, but for you, the individual, there are quite a few changes in the fine print that should matter to you, and we'll talk about a few of these key changes. For me, one of the big changes that I saw in one of the inside documents of the finance bill, essentially the memorandum to the finance bill, was a change in the tax treatment of sovereign gold bonds. Now, I'm sure that quite a few of you are aware of the sovereign gold bond. It was introduced in 2015 by the government when they tried to reduce the imports of gold. This was essentially paper with no underlying gold, but it captured the value of gold that moment, and the government was trying to get you to shift from buying physical gold into buying this as an investment. And the lure or at least the hook for you was that they would give you a 2.5% interest that was payable semi-annually, and they also said that if you held it for 8 years, that is the full duration of the bond, then your capital gains would not be taxable at the end of it. The latest update, though, has said that this advantage, that is the waiver of capital gains tax, would only be available to you if you had bought it at the issuance. And starting from the 1st of April, that means that if you buy a sovereign gold bond in the secondary market, you won't get the benefit of that waiver of capital gains tax. There are a few implications of that, and beyond that, there's also the underlying movement in the gold market and the silver market that we need to focus on. So multiple aspects. Essentially, we'll be talking about how you should plan now that sovereign gold bond is out of the window if you haven't bought it already, and what you should do with your gold and silver allocation. I'm joined today by Vishal Dhawan, who is the co-founder of Plan Ahead Wealth Advisors. Vishal, thanks so much for taking the time. Pleasure speaking with you. One, what do you make of this? My interpretation was that there could be an increased demand for sovereign gold bonds, at least in the remainder of this financial year before this kicks in on the 1st of April.
Yeah, so I think there are a few, clear things that have come out of this. So one is
the premiums that sovereign gold bonds had in the secondary market, because the primary issuance has stopped for a long while now. There haven't been any issuances at all for a fairly long period. It's been over a year that there's been no issuances in the primary market. Is that whatever buying was happening on sovereign gold bonds was happening only through the secondary market, and those were already sort of resulting in the fact that there was a 5 to 12% premium virtually at all times on the actual price of gold versus what you were buying in the secondary market. So in theory, some of this tax benefit on maturity was getting priced in the way that you were buying those sovereign gold bonds. And I think it's important for investors to keep in mind that if you look at how a lot of this has happened, it is going to create a lot of confusion for your tax now, because the question will be that when exactly did you buy this and at what stage did the tax law change? So to us, it seems like for most investors, they should now be careful about buying sovereign gold bonds in the secondary market, because there are going to be probably different interpretations on how anything bought between, say, Feb 2nd and March 31 is going to be created or taxed on maturity. Because what it also talks about is in the tax provision, it talks about the bonds are subscribed to the time of original issuance. So even if you buy it in the secondary market today, you have not bought it at the time of original issuance.
Yeah.
And therefore, because of that, it is very likely, and in fact, most likely, that you can't really take action today to buy the secondary market sovereign gold bond, because that will still end up becoming taxable.
No, actually, my interpretation of that was starting from the 1st of April, if you have not bought it from a primary issuance, then you will not get the advantage. So therefore, the interpretation would be that if you buy it in the secondary market on or post the 1st of April, then you don't get that advantage. Be that as it may, I think the attempt here is to correct the dislocation of prices that was taking place, as you pointed out, in the secondary market. Is that the right interpretation?
Yes, I think, we've had a very strange sort of pricing mechanism over the last few months, and it started actually towards the second half of 2025, when the rally in both precious metals, that is gold and silver, started to happen. So depending on where and how you bought that particular investment and the sort of vehicle that you used to buy into it, you saw different things happening. So there were times where there were premiums, there were times where there were discounts. So there's been a fairly large price dislocation, and depending on how you chose to buy, you've had different prices and therefore different returns as well. And this is also got accompanied by the rupee falling. And because of the fact that gold and silver tend to do well for rupee investors when that happens, you've had another impact coming from currency as well. So it has been a fairly challenging 6 to 8 months for people to figure out what's been happening. And as long as everything was going up, it all felt good. I think it's only more recently that this has changed.
I do want to point out, by the way, I forgot to do that at the start, but the last issuance of the sovereign gold bond took place in February 2024, and the price that was arrived at for that issuance was 6,213 rupees per gram. This is important because the prices are well above 15,000 rupees per gram even as we speak right now, despite the kind of slide that we've had. And so people who bought even in that last issuance, Vishal, have had a supernormal return. Let's face it, there are no longer products as sweet as the sovereign gold bond in the market right now. But what, in your opinion, is the way to have that gold allocation? And I think it's important to stress here, and we've been speaking about it in the run-up to this crash in gold and silver as well. It's important to look at allocation and not the FOMO kind of jumping into gold and silver that a lot of people have done.
Oh, absolutely. I think, the amount of interest in both these precious metals have garnered over the last 6 to 12 months is tremendous. And I think we need to separate out, the roles a little bit of both of these precious metals, because sometimes it can appear that they're actually doing the same thing. we've always thought that, gold is more like a stability anchor in a portfolio, and it's also a bit of a monetary hedge. So when governments spend too much money, when the dollar starts to get, look like it's not the most favored currency in the world anymore, etc., you will typically find that gold would tend to be that anchor in your portfolio at that particular point. And if you look at silver, it's really this, higher volatility industrial play with some characteristics of, protecting value in terms of an inflation hedge. And therefore, it's important to understand that, even though both are precious metals, they don't have to be treated in exactly the same way. And you can see that in the recent correction as well, that the amount of correction that's happened on silver has been far sharper than what has happened on gold, and vice versa as well. When it was going up, silver started to gallop much more rapidly as compared to what gold did. So I think it's important to understand this and then take the allocation decision saying, okay, now that I'm clear about the roles that these asset classes play or these precious metals play, how do I want to build it into my portfolio? So traditionally, a lot of what got built was around, saying that these exposures need to be between 5 and 10% of portfolio strategically. I think with whatever is happening in the world in terms of geopolitics, the movement away from the dollar, global fiscal positions, which seem much weaker because debt has exploded, I think there may be a case to have a marginally higher exposure. So for people who were earlier looking at 5 to 10%, they might decide that I'm okay with 10 to 15 or 10 to 20. But I think what we've seen is this huge FOMO, like you pointed out, where suddenly the conversation has moved to saying there are supply mismatches, and therefore I need to put all my money to silver or to gold. And I think that is where all the risk lies, because as long as you're doing an asset allocation strategically, I think you're okay. But otherwise, I think it's a very dangerous game to play.
I love that you pointed out what you did, and I think it's a very important, for me, this would be the biggest takeaway, Vishal, of our conversation today, where you're saying that given the kind of scenario that we're in right now, where you're talking about geopolitics that has made headlines practically every second day in 2026, and you have de-dollarization that has taken place, you've had a weakening in the dollar, which usually means good news for commodities and particularly for gold. You have a situation where yields in the US are likely to be heading lower. All of these things are structural tailwinds for gold. And from that perspective, it means that you can have a slightly larger allocation and you can go all the way up to 20%. It's a very important statement that you're making. I'm glad that you're making that statement. But how do you buy into this? Would you prefer, as a lot of people have done, to go through the multi-asset fund route? Because you don't have control about what the fund manager is going to do. A lot of them actually unwound and brought their positions lower as gold kept rising. Or do you go through gold ETFs?
So I think there are two things which are very important here. That, it's critical that when you decide to enhance allocation tactically to a asset class, you do that gradually. So it's very, very critical that even if you decide to make that 10 to 15 or 20, you want to do it through a gradual process and not decide to do that overnight just because there's been a sharp correction that has happened. So something like in, SIP equivalent is a great idea to actually build this out on a gradual basis. Coming to, how do you end up doing this, right? So there are two different types of ways to do it. For a lot of investors who are very uncomfortable with volatility, they will prefer to still go through a multi-asset route, because between the equity, the debt, and the gold and silver, and maybe even some international equity within the equity component, all of these can typically combine together in a manner where what you see on a daily basis or on a weekly basis on NAV seems far more measured as compared to when you buy these assets through standalone ETFs or through standalone fund of funds which buy gold and silver. So I think for investors who understand that these assets are going to be volatile because this is a shift which is happening globally, I think it's a good idea to buy these either through funds which combine gold and silver together or through standalone funds or ETFs, but they need to do it gradually. For those who can't handle the volatility which comes with all of this and are very focused on price, I think they still may be better off going through a multi-asset fund.
Okay. I'm glad that we've had this conversation, and the strategic long-term building of a gold into your portfolio is the point to take from this conversation, apart from the fact that Vishal is saying that you can increase your allocation towards gold. Vishal, thanks as always for taking the time. Pleasure speaking with you.
Thank you so much. Thanks for having me over.
All right, so we've spoken about the change in the tax treatment on sovereign gold bonds. Let's talk about the various other changes that are aimed towards ease of compliance with the tax laws when it comes to individuals. And there are a few big changes to talk about, particularly with regard to return filing. And joining me in studio to talk about all of that is Abhishek Mehta, who is the founder of Investa Capital. Thanks so much, Abhishek, for taking the time.
Thank you, Alex.
Let's start with the normal ITR process. There are a couple of changes that have come through. It says that it's a staggered process now. How does that work?
Right. So basically, earlier, a lot of operational difficulties were coming because there was one due date of 31st July. So even chartered accountants were under pressure to file the returns, and even portal was getting a lot of difficulties because there was so much rush of returns. Now they have done a bit of staggered manner in filing of the returns. What they have done is ITR 1 and 2, which is mostly for the salaried class, will now have to be filed by 31st July.
Okay.
ITR 3 and 4, 5, 6, which is non-audit cases, has to be filed by 31st of August.
Okay.
Audit cases, the first they have to file their audit report, which have to be filed by 30th September.
Okay.
And the return of this audit has to be filed by 30th of October, 31st August. So they have staggered it now in July, August, September, October, and if there is a transfer pricing case, it will go for 30th November.
Okay.
So now there is a 6 months window where different baskets have been created to file their original tax returns.
So ITR 1 and 2, which is a bulk of people, nothing changes for them.
Nothing changes for them. They will file by 31st of July.
Okay, but there's more beyond this, right?
Yes.
This has to do with the revised filing update. First of all, what does all of this mean? There's the basic filing which you're supposed to do.
Yes.
Where does the revised, updated, all of this come into play?
So, see, I'll just give you a glance of summary. There are total 6 types of ITRs. Okay. ITR 1, 2, 3, 4, 5, 6.
Sure.
And 7 is also there. So, different people come into these different kind of ITR forms.
Right.
Now, there are 4 types of ITR filing.
Okay.
One is original ITR filing. Second is a revised ITR filing. Third is belated ITR filing.
Okay.
And fourth is updated ITR filing.
What does all of this mean?
Okay, so the original ITR filing date is basically you are putting everything perfect, you are filing your returns on time. That is this staggered manner of 31st July, August.
And for Saral and all of that, it's 31st of July.
It's the original ITR.
Yeah.
Supposedly, now you forgot to file your return and you want to file a belated return. You didn't file the original return as per the due date. You can now file your belated return up till 31st of December only.
Okay.
Okay, you cannot file it up till 31st March.
What was it before?
Earlier also it was 31st December only, but revised return due date. Now you suppose you filed your original return, you filed your belated return, you want to revise it, you forgot something, you forgot your foreign income, you forgot some transaction which you now want to show it. Now you can file your ITR updated return till 31st of March.
Okay.
Earlier it was December.
Okay.
The only thing which people have to remember is to file revised return, first you have to file the original return or a belated return.
Oh.
Then only you can file a revised return.
Sure, yeah,
so
of course.
Don't mix this up that now I can file return up till 31st March.
Sure.
No, you have to file either the original return up till the due date or the belated return up till 31st March.
Yeah.
And if you want to revise your return, the due date has been extended up till 31st of March for that.
And you mentioned one more, which is updated.
Updated return. Now, supposedly you didn't even file your original return, you didn't even file your belated return, you didn't even file the revised return. You have, after 1 year, 2 years, you realize that, oh, I forgot to file my return. Okay, then you can go and file an updated return, but there comes a very hefty cost of 25% to 50% on the tax is the penalty if you go and file your updated return. 24 months after the assessment year is over, you have the time period to file your updated return.
And just to be clear, so that even people who have never filed in their life, and they now are getting into the workforce and they're going to file for the first time.
Yes.
Your assessment year is the year after the financial year, in which the taxes and the returns on the taxes that you've paid in the previous year have to be matched, and effectively you're filing your return.
Right.
So
So
the assessment year.
25-26 financial year, the assessment year is 26. 27, and you can file your updated return up till 29. So up till 31st March 29, you can file your updated return for this current financial year. One small thing which
Sorry, what was it before?
It was 24 months only, but there is one small change in updated return also. Earlier, what used to happen, if the AO, assessing officer, has started an assessment, you forgot to file your return, and AO has initiated the assessment, you couldn't file ITRU, which is the updated return. Now Nirmala ji has said, even if assessment has started but not yet completed, please go and file your updated return, pay your taxes, pay your penalty, and get freed of the assessment proceedings. So that change has also been done in this budget to remove all the operational difficulties which taxpayers were getting.
You know, there were a couple of other changes with regard to TCS as well, right?
Yes.
The tax collected at source. Right. A couple of things stood out to me.
Yes.
One is the reduction in the tax collected at source for these foreign tours and travels from 5% and 20% to 2%.
Right.
Right. So that is significant. And
Yes.
the second one is for remittances under the liberalized remittance scheme. If you are going for educational reasons or medical reasons, that's brought down to 2%.
2%. So earlier, if you were sending for your child's education more than 10 lakh rupees, 5% was the TCS, which the banks were collecting. Now that has been brought down to 2%. And even when you were taking foreign tours and packages, that was 5% and 20%, which has been brought down to 2%. So three good changes, because a lot of people send their children for, outdoor studies, foreign abroad studies, and 5% was really hitting them.
Sure. But what about investments? That still remains at 20%.
Yes, that still remains. If you buy shares of Google, Apple and all from these platforms, you still have to pay 20% as the TCS if you're investing more than 10 lakhs. So there's no change. Only three rates have been changed when you're buying foreign tours, when you're sending money for medical purpose, or you're sending money for your child's education. So these are the three key areas where the TCS rates have been changed. Apart from that, everything remains the same.
There are a couple of other changes as well, and one has to do with the selling of property by a non-resident Indian to an Indian, right?
Right.
There was a requirement for a TAN which has been now done away with.
Yes.
Is that a big positive?
Yes, so there was an operational inefficiency basically. If I'm a resident Indian, I'm purchasing a flat from a resident person, I can directly go and pay that 1% TDS by the form 26QB. But if I'm purchasing from a non-resident person, I had to first go and apply for a TAN number, pay the money, file the TDS return, then after the transaction is done, again go and surrender my TAN number. So that was creating some ineffectiveness basically on the buying a property from a non-resident person. Now Nirmala ji have taken away that also. If I'm purchasing from a non-resident person, I can directly go and file the form and I don't need to apply for a TAN number. Another good thing Nirmala ji has done for the NRIs is that they are coming up with an automated route to apply for a lower TDS certificate. Earlier what was happening is on the sale value, if I'm purchasing from a non-resident person, I had to deduct almost 22% TDS on the entire sale value for the NRI. Now, how you could have escaped this is probably by going to your assessing officers and getting a lower TDS certificate. That used to take almost about 60 to 90 days to get the lower TDS certificate. Now Nirmala ji is coming up with certain rules and regulations where if you'll apply, you'll automatically get the number, a lower TDS certificate without going to the AO. The details are not yet disclosed, but they have given their intent that we are coming up with certain rules that your lower TDS certificate gets more quicker to get it.
Okay, so these are all positive. There's one more thing that I remember, and that has to do with the 6-month window to disclose foreign income and assets.
Right.
How does that work and why is it significant?
So earlier, what used to happen in the Black Money Act, if you have forgotten to file or if you have escaped to show your foreign income or your foreign assets, there was a penalty of 10 lakh rupees. And a lot of these nudge campaigns were run because income tax department got exchange information from other countries. Now what Nirmala ji has done is she has given a 6 months window to everybody to file their foreign income plus their foreign assets. And if they file it, there will be very less penalty and the tax on that amount if you file your things in this 6 months period, and you will be free from the prosecution. What form has to be filed, how it will go ahead, that details are yet to come. But she has given this 6 months window. Suppose if you have a property in Dubai and you have not disclosed it to the Indian authorities, you have this window to go and disclose it.
Okay. So, tie that to everything that is taking place. And is there anything beyond this that we have to bear in mind with regard to the tax announcement?
There is not much changes. I think these are the key changes, and again, everything remains the same. Now, what happens in the new tax bill, we'll come to know with that time only that what key things are getting changed in the new tax bill. For example, they are changing some definitions. They are going away with assessment year and financial year. There will be only financial year. There will be no word as assessment year in the new tax bill.
What would the implication of that be?
Nothing. There's complexity, because people used to get confused. What are you talking? 25, 26 is the assessment year or the financial year. So now everything will be in a standardized format, talking only about the financial year.
So a lot of simplification will take place.
Yes.
But operationally, nothing really changes. And this whole STT thing has also come into pass.
Yes.
I don't know. Do you know a lot of people that trade in the market?
See, now the government stand is very clear on this. There are 3 types of people. One is saver, one is investor, one is a trader.
Yeah.
Government doesn't want too many traders. They want people to be investors. Long time investors. What India did quickly was, from saver, they jumped to investor, from investor to trader quickly without getting the exact knowledge of how to do the trading. People started doing their business also and did this business also. Government is very clear. They don't want trader, and if you're a trader, do this full time, or else don't do this. That's why in the ITR also they call the FNO as a business income and not as investing income on the capital gains. So according to me, bringing STT may be a good thing, because it will deter people from playing in the FNO market, and people who are serious, who know this business, will only get into the futures and options business.
Fantastic. So I think we've covered a lot of ground. Thanks so much for taking the time, Abhishek, as always.
You.
And we'll keep coming back to you as and when there are changes in the tax laws. But that should give you a perspective on everything that has changed. Let us know if there's something specific that you'd like us to talk about. In the meanwhile, there's lots that you can watch on this particular channel. Thanks so much for watching. This is NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Budget 2026, the growth agenda.
We are in conversation with Mr. Market. You can call him that because he eats, sleeps, breathes market. He's literally the face of the Indian capital markets, if you will, Mr. Ramdev Agrawal. And post-budget, I think it's important to get his perspective on what he made of the budget, of all the recent things that have happened and the outlook ahead. Mr. Agrawal, great having you. Great being here. Thank you so much for talking to us.
No, nice to see you again.
Yes, likewise, sir. What did you make of the budget? Do you want to give it a rating? Do you want to give it a number? Or do you just want to talk about what are the key highlights according to you?
Yeah. Brilliant job, but communicated very badly.
Okay.
I mean, particularly the stock market guys. By doing that, 10-12,000 crores is nothing in this size of the budget. 50-60 lakh crores you're talking about. You're talking about Viksit Bharat. You're talking about tax break for 22 years. I mean, such big things are there in that. And then suddenly you do that small thing, spooky thing, STT, this. I think that was mindless, but otherwise it's a brilliant budget.
Okay, what gives you this impression about it being a brilliant budget, the cornerstone?
Yeah, so one is that, one is the financial prudence. See, government is running a budget, the expenditure and income and how you are running the balance sheet, how you are, at what level your borrowings are there. So that shows the responsibility with which government is moving. They can also be very reckless and things like that. But they're saying, okay, we'll do debt to GDP from 56% to 50% over 2, 3, 4 years period. So that's a very good thought because that leaves a lot of space for the private sector. Second, if you see the ferocity, I mean, I'm most impressed by the ferocity with which the government has moved to give the tax break to, for setting up data centers, the tax break. One is the size and second is the conviction, and then of course that what is that 15% for GCCs and all. What they call it? You can have certainty of how much taxation will be there. They use some
sunset.
No, not sunset. I think they have called it. So there is a almost like a certainty that how you will be taxed. So I think there is a lot of reforms like that which are far-reaching in character, and even the capex boom, which last year was 11.5 lakh crores, now it is 12 lakh plus crores. So everything is in place, and expected GDP growth, nominal GDP growth is more upwards of 10%. I think it's almost like 11%. If I did my numbers right, 394 lakh crores against 354 lakh crores. So that's quite a good number. And to achieve, which last year they couldn't achieve, this thing was a credit flow. The credit, I mean, that will come in now next RBI policy, because that's not part of the budget. But to achieve 10.5-11% nominal GDP growth rate, they have to have a very good credit flow of 13, 14, 15%. Hopefully inflation doesn't spike, you know. So my sense is the year 25, 26, 27 will start with a bang. You have a very good fiscal concessions in last budget. Then we have a dramatic GST cut in November, December. So you are given direct taxes, you are given indirect taxes, and now the third, which is mother of all, actually bigger than these two, is the credit flow. So now credit flow has been restored from 9-10% to 13-14%, because that only can get you 10.5-11% nominal GDP growth rate, and with that you'll get your taxation, tax collection, you'll get your fiscal, you'll remain within that. The only joker in the pack, which nobody knows, is the how inflation will behave. If inflation remains below 4%, I think we are really Goldilocks economy.
That's what they've penciled in, and in some sense, some bit of an uptick in inflation might be desirable to.
No, we must go up to that, so that otherwise, if you are 11% nominal GDP, and if your inflation remains actually at 2%, then your real growth will be 9%. I don't think we are there. I think we will go at about 8%. I think my sense is we'll definitely cross 7.5% kind of situation in the at least next 12 months. Looks like that.
You laying a fair degree of importance of growth. We saw that yesterday as well in the gathering that we had, right? Do you sense telltale signs by credit growth, auto sales, etc., that growth could actually surprise on the upside? Because thus far, growth has done that. Most economists have not been able to predict growth. Most market people have.
I asked my own economist.
Exactly.
She again said 6.5. Let's see what comes.
Okay.
My sense will be 8.5 times, 9.
Wow.
Because you have pumped so much of credit in last 40 days. You have pumped 10-12 lakh crores. This is unprecedented what is going on in the monetary markets. And yet the yield is spiking. So it has some other problem in terms of availability of liquidity. Deposits are not circulating, and all kinds of problems are there.
Yeah, I mean, maybe a number around the gross borrowing as well is something that...
But that's a small spike. I don't know why market was so touchy. My sense is that market didn't like the STT stuff. So they started selling. In any case, backdrop was already this gold and silver debacle had already happened, where it was down by 20-25%. So in any case, mood was bad, because the guys who are in commodity market and stock market, they're same. It's on the same screen. So clearly, those guys were suffering from that. At our place, guys were short in commodities, just to tell you that.
Okay.
So, but the mood was bad about the commodities, and then on top of it, this STT, this irritant comes, you know.
Right.
I would call it irritant because it is a very small thing, and actually for investors, it doesn't matter at all.
Right, agreed.
It is only for the speculators, which is, they have touched it. So, and once market started going down, then nothing looks good. You know, all the commentators, they come, and even I was very peaceful right till that provisions came, and then suddenly this thing came and it spoiled the mood. And I don't know how much impact it will have, because I'm scared about what's happening in other parts of the world. Today, I think Korea is down 5-6%. Last week, Indonesia was down 10-12%. So I said, I mean, this is not the time we should be actually taking panga with any of these investors, whether domestic as well as foreigners.
Completely.
This is the time to, time to stay away from them and don't irritate them. In any case, earnings are not there. There's a big challenge about the earnings growth, and FIs are selling. So this is a time to stay a bit more cautious?
Sir, a couple of technical factors. I'm just putting in the markets in between and then again coming back to the budget and some provisions. I want to know a bit about data centers for sure from you. But just a couple of technical provisions, Mr. Agarwal. Korea is down today because the AI trade seems to be just at the margin unraveling a little bit. And everybody is saying that India is the classic anti-AI trade. If the AI trade reverses, India could actually benefit.
So the story can change every day. I mean, this is the way you are putting the story. Because market is up. If market was down 3%, you would have said that we are following the world.
That's true.
So it's all, the way whether ticker is green or red, that decides how we are commenting.
No, but broadly the belief is that if money was chasing AI and if the money stops going towards AI, the non-AI plays might benefit.
No, that makes solid sense. That makes sense. Yeah.
So if that were to happen, plus maybe the trade deal with the US, if it were to come about.
They'll all happen. Niraj, they will all happen. Just we have to have a little patience. We want everything happened yesterday. No, it will take its own time. Maybe week, maybe few months. So you have to have that patience while economy is doing well. See, economy is rocking at about 7.5%, 8%. So how does it matter? This agreement is not signed or that agreement is not signed. I mean, if it comes, it will be yet another tailwind. But today, I mean, I don't think by signing that trade deal, you are going to go from 7.5% to 8.5% growth. No.
Sure.
It will be at 7.5% only. Maybe it will become another 20 basis points. But it gives a psychological, kind of comfort that India is rocking. India is welcome everywhere. Our businessmen are this thing. And they can also come in. We can do the trade. I think the impact of EU deal is far-reaching. I mean, it is not... See, these deals are not going to impact in 6 months or 1 year. But as you go along in 3, 4, 5 years' time, I think, so we are looking, I'm looking at the earnings growth for next 5 years, not for the next quarter.
Agreed, sir.
But so if I can double my earnings in next 5 years by exports or domestic demand and all, I think we will do very well.
But sir, one of the pieces is that while the economy is doing well, the capital markets have been stumped. Worst performing market dollar terms 2025.
Yes.
YTD is not that great either. Should the budget have done something positive for the capital markets? And is there something that should be done for the capital markets? Economy अच्छा कर रहा है.
Yeah.
Capital markets के लिए क्या कर सकते हैं?
See, then you have to listen to the people whom you want to entice. I'm very fine. I'm an investor. Nothing has happened. The buyback they talked about, but that's useless in the sense that I'm a promoter. My status remains same. So if I'm not doing buyback, I'm not doing buyback. But so it is irrelevant for me. So that's how they open up a subject, but they don't do a good job. They've not done a good job there. I sincerely think they've not done a good job. It's a wasted opportunity. Either you don't open the Pandora box. When you open it, then you do it properly. So that's one. Second is your this STT thing. I think that needs to be kind of rethinking, if at all. More intelligent. I mean, directionally, I'm for it. Less speculation by the unintelligent people or common man. That is the objective, yes. But there are much better ways of doing it. See, the professional traders with a lot of liquidity and all, when they come, that actually imparts a lot of liquidity to the market. It does a lot of good to the market. And without them, a large amount of even investing by the mutual funds, domestic mutual fund, is also not possible. What will happen is the market becomes illiquid, the bid and ask becomes very wide. And that is actually, that cost is much higher for all the mutual fund investors. So the speculators have a role to play, and the organized speculators who are global, who have global balance sheets, if they come with sophisticated technology and they impart liquidity, I think we should facilitate that rather than discourage them. But I also don't want my small guys from village or tier 2, tier 3 towns to get burnt into this particular fire.
Right.
For that, there are many ways. You can say that, okay, if your net worth is less than 2 crores, you're not allowed to do it in F&O. So there are many ways. Because of digital infrastructure, you can do a lot of this risk, kind of profiling.
Let the big guys fight against each other on the options market.
Yeah, okay. I mean, the guys who you don't care about.
Yeah.
The big guys, like net worth whose net worth is 1,000 crores, let him do whatever he wants to do. In any case, he will do what he wants to do.
Yeah.
You can't stop him. If you stop him in here, he will go to crypto, he will go to some casino, he will go to some currency. There are many ways you can speculate.
That's true.
Why just restrict him? Why it becomes such a moral kind of inspector or something like that.
Got it. So what is maybe underappreciated, because it's now being done so often, because this government has shown this towing the line of fiscal discipline so well and gotten the ratings positives, is that they're sticking to that in a year, post a year of GST cuts and income tax cuts, right? Would you have rather, because there was talk, that let the fiscal glide path slip a little bit, but give more money for capex? Are you of that camp, or do you believe this is a better thing?
No, I think they're better. And see, I mean, growing at about 7% plus, in truly in an inclusive way, if you grow anywhere around 7.5% with an inflation of 3-4%, that's the most ideal situation to happen. You know, why particular industry is not doing well when this is doing, when the economy is growing at 7.5-8%? That could be a very micro issue or something like that. But otherwise, I think we can't ask for more in this situation. So it's a Goldilocks, and the world is burning. The world is very volatile. We are very peaceful here. You know, my forex is at $700 billion plus, despite all the problems. Okay, we have lost some parity with dollar when the dollar itself is weak against the rest of the world. So that needs to be seen because of this treaty and all which is happening, and so that's geopolitical. I have no view on that. Whenever it happens, it happens. But I think we are moving in the right direction. Most of the geographies of the world, we are going to have trade deal. That's what minister was telling me. And that too very shortly. So by end of this year, 2026, I think we should be very well aligned with the whole world. We are the most complying country, very nice land of Buddha, you know, and no IPR, this thing. We are friends to everybody. You know, so I think this is a country everybody wants to have friendship. It is the weakest currency, lowest cost, most brilliant people in the world. I think it's rocking.
आपको मार्केट में तेजी दिखती है सर 5 साल?
मेरे को हमेशा ही तेजी दिखती है।
हाँ, but इस बार थोड़ा अलग दिख रहा है. Is the setup looking like 2003 to 2007?
इतना बड़ा नहीं दिख रहा है.
इतना बड़ा नहीं.
Because see, 2003 to 2008, for that you need a global growth to rock. But actually global growth is rocking. Despite the news items, US is growing at 3.5-4%.
Exactly, that's size.
So actually the world is growing very well. World wealth creation is happening very rapid pace. But right now hiccup is there. So I remain positive, and this AI could be bigger than China. See, 2003 2008 was rise of China.
Right.
Can the AI, I mean, if you listen to NVIDIA or Satya Nadella or even Elon Musk, if all three, if anybody knows AI, they know AI or future of AI. They are saying, Huang, you listen to him in WEF, Davos, and he's saying that this is the humanity's biggest capex boom, build out. Humanity's biggest. And we were not participating. This budget has at least made us participate.
For the data center thing.
For the data center thing. So, I think, I mean, budget can do only that much. And let's see how things roll out, how the entrepreneurs, they participate, how the global private equity funds, they come and set up big data centers here. So, it's all in progress. You know, this AI thing is unfolding. I mean, it is being, the biggest debate is whether AI is a bubble or, you know, it's real. So AI itself is, I think, real.
Yes.
The issue is that the investment and the excitement around that could be premature, you know. Maybe, I mean, we know, we underestimate the impact in the future and overestimate in the short term. That might again repeat, you know, what happened in when internet came. I mean, without internet, there is nothing.
Agree.
Today, India is one because of internet.
Sure.
20 years back, internet was not there only. So that is the kind of impact AI is going to have. Now, are we patient enough to wait for that, the fruits of AI to come, or are we worried about just 10-20%, you know, decline or correction in the market?
Got it. So therefore, if 2026, a number of things, a potential trade deal with the US, right, on the anvil, if the AI trade were to cool off a little bit, maybe optimism for India, but it's also an election year. We have 5 state elections in the month of May.
That is yet another story. You guys will start rolling out, you know, what happens in election.
No, sir, but we've seen now that populism is a real thing across states, and there are 5 states, 4 of which are opposition states. Could that bring about any kind of nervousness in the market until that gets clean? Because then it's a clean
already
calendar.
we are already living the full nervousness, and that was further kind of complicated by yesterday's provisions of the STT and all. So that's what we are saying. We are tired of this volatility. Don't give any new reason, at least man-made reason. To be volatile, you know.
But then, how does 2026 shape up, sir? Now that the budget is also out of the way, you think after
I'm telling
underperformance
you,
in 2025,
it's all about after GST2 cut, now it's all about the credit flow. If the credit flow remains at 14-15%, because credit is like ATF. You know, when you grow at, instead of 10%, you grow at 15%, on 200 lakh crores, you're talking about 10 lakh crores additional.
Right.
Now 10 lakh crores is 3% of GDP. You put in the hands of the people who have bought things. See, credit, there's a difference between credit and income. Income, I give you, instead of 1 crore, I give you 2 crores. You may not spend anything out of that. But credit, when you give 10 lakh crores credit, it is after you have spent. It is to facilitate your spending. You know, so
which you will spend.
And it's immediate, you know. So I think the power of credit, which was kind of withdrawn last year, it was very muted last year because of this election and all. We brought down the credit flow from 16-17% to 9-10%. And that actually slowed down the earnings big time. I mean, earnings could have been much better otherwise. Now, being restored, now the delta is going to be, because on the slowed down earning, you pump the credit to higher level, so you get double whammy.
Got it.
You know, so you see a big shootout in the earnings. The companies which benefit, you will see 40-50% earnings growth.
Wow. Yeah, and what spaces? I mean, could these be the lenders? Could it be
all
consumption focus?
All interest sensitive. You know, and then there's a multiplier effect. You know, you might have seen Nestle earnings, 18% top line growth, 25-30% earnings growth. So those things are now. So now consumption will spike.
Got it.
Now consumption will spike, but the policy making should not be very jerky. When you are saying, you must give actually guidance of credit growth also. Given this thing, inflation of. See, our monetary policy has said 4% is around 4% should be the inflation. So why do you go down to 1%? You know, and kill the economy. So I think the prudent management of the economy, keeping inflation anywhere between 3 to 4%, and then allowing the credit growth at a reasonable level of 14-15%, and build the economy at about a 7 to 8% kind of thing. That is what is going to give the trajectory of earnings growth of about 12, 13, 14%. And my multiple is already corrected to 2021. So I'm not being optimistic nor pessimistic on the multiple. The earnings growth of 12, 13% in index will give me that return in 6 years.
Yeah, perfect. Okay. And maybe, I mean, as we tend to do in good times, we tend to overshoot as well. So who knows, the earnings growth will be even stronger.
It's not going to happen straight. First it might go down and then it might shoot up. The end game could be where we want to be.
Okay. A couple of things on the budget. I have seen that you have observed this data center piece probably very closely. Yeah, very differently.
Because I'm reading a book.
Yeah, okay. So tell us a bit about what did you make of this announcement? Because you seem to be very chuffed about it. I mean, 22 years tax holiday, etc.
Yeah. So, see, first thing is that I'm more excited about the AI itself.
Got it.
Because I'm reading biography of NVIDIA and the thinking machine. You know, you read that, it's a non-stop reader, in the sense that in 3 days you'll finish it out.
Okay.
So that will make you understand what kind of thing is likely to happen. The world is going to change. It's like saying yet another form of internet is coming. Much more powerful internet. So internet changed everything. When internet came, it came very slowly. It looked like we didn't have phone only. Forget about internet. First phone came. First mobile phone came in 2000, 2002, 2003. Bharti got listed in 2003. Right. We started getting cell phone in hand. By 2010, we had 500-600 million, 700 million phones. So everybody was at least connected by telephone. In 2009-10, the smartphone started coming in, where internet could be pumped.
Yes.
So when the internet became mobile, you know, that was a real revolution. When you have the data flowing on your hand, and I mean, now 70-80% of the trading in stock market happens through this thing, phones. So now the phone has become the most popular mode of communication or data flow. So what is happening is that what was not existent I mean, you started giving licenses of mobile phones in 95, 96. So in 25 years, how much has happened? The phones came, the internet came, both got merged, and today you have a wonderful machine. And the speed is continuously growing. So now with AI, it will further get accelerated. What all it can do, I cannot visualize. I'm not a science fiction kind of guy, but I think potential of AI in the longer run is immense in every aspect of it, whether it is healthcare, whether it is logistics, whether it is all kinds of radiologists and all already. Radiology is being read almost 100% by AI now with far bigger accuracy.
Sure.
So one of the best thing what Huang is saying is that when you ask him that it is going to take away job, you guys are mad. It is going to create jobs and jobs and jobs. That's what he's saying. That radiologists, now instead of going to radiologist, you must put your X-ray onto the AI. The job of a radiologist is not to see the scan, it's only a task. So that he can take care of your some other problem for which you say you got a fever. For that he has taken a scan. So the task is to take the scan, but the job is to take care of your fever. And for that, now the radiologists have become far more powerful. So the world is needing more radiologists than less. So he's saying that there's so much of jobs all over for building data centers, cables, you're plumbing, you're building the damn thing. Power. Now you need the power. So much of power is required. So he's saying that this is in humanity's largest capital build-up, and in that we were completely missing out. Here is the step.
And you think that whole ecosystem will benefit in India as a result?
See, this is at least the first step, very aggressive one. Means what I'm saying is what I can see, government is aligned. The step is aligned.
Right.
Now, how the entrepreneurs will play, how the global the data center guys, hyperscalers, they play it out, and then our guys piling onto them. Let's see what happens.
Got it. Final couple of questions, Mr. Agarwal. So, if we were to see this credit growth or credit flow linked growth in 2026, 2027, you already told me that rate sensitives will benefit. What will, aside of that, what leads higher? Data center is one play, which is a budget stemmed play. What else do you think is at front and center? Does auto, for example, or CVs within auto have a up cycle ahead of us?
You see the December numbers. I live by the numbers. See, now stock market is not about the stories. It's all about data. You can say that this industry looks very good, but there's no growth. This company is very good, but it earns only 12%. So you give me 15, 20%, 25% plus ROE, 25% growth, and give me a 10, 12 P or 15 P. So the terminal value can be assessed in a much more intelligent way. It's all about terminal value.
That's true.
And if there is no data flow, how do I figure it out? And whether you are a SME listed somewhere, you still have the data flow.
That's true.
Earlier, if it is a small company, nobody used to bother because there's no research coverage. But today with the screener and all, you can see telco and some $100 million company in the same kind of a scanner.
That's true.
So a retail investor is actually very, very powerful. He has time. He must read books and use the framework. Develop your own framework. What works for you? Of course, there are gurus and gurus. So develop your own framework, and data flow is there. And mint money, not make money, mint money.
Guru, one final thing, Mr. Agarwal. Are you changing your investing framework? And the reason I'm asking this to you is because of a few things, right? पहले मुझे पता आप बोलते थे कि while you look at numbers, आप promoter को पूछते हो कहानी क्या है. Now you are telling me today that now is the time for data. I'm sure अभी भी आप कहानी पूछते होंगे, but now is the time for data.
कहानी supported by data.
कहानी supported by data, but data at the forefront. AI, you're saying, is likely to change the world, and you are thinking about it that way. And plus, it's a very different world. From a collaborative world, we've now gone to countries trying to do what they are own. At least the US is leading the world to think like that, right? Are you changing your investment framework?
No. If framework needs to be changed, then what is the framework? It has to be timeless. See, QGLP is a timeless. Now, what companies you fit in, what data you fit in, that's your problem. See, instead of, say, if I was looking 10 things for deciding quality of company, maybe I'll look at 2 more. But top quality business, top quality management, growing, and available at reasonable price. That's the game.
Okay, perfect. Great. Mr. Kawal, lovely talking to you. Thank you so much for the insight. Thank you for that book as well. I'm sure a lot of readers will now pick up that copy.
Amazing book. You must go and read that book.
Yeah.
Thinking Machine.
Thinking Machine.
Yeah.
Perfect. Okay, great. Thank you so much, sir. Thank you so much. Really appreciate it. And viewers, thanks for tuning in to yet another insightful conversation with Mr. Ramdev Agrawal.
Budget 2026, the growth agenda.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की
Good evening. You're with us on The Big Question on NDTV Profit. I'm Vikram Oza. The big talking point since yesterday's budget has been that massive hike in securities transaction tax, STT, on F&O trades. Now, options STT is up 50%. Futures STT up a steep 150%. And all of this kicking in from the 1st of April this year. Now, the government says this is not about revenue. It is about reining in speculative excesses at a time when India's derivatives market has ballooned, often at the cost of retail investors. And SEBI's own data, when you look at it, is showing that 90% of retail F&O traders have lost money in FY25, with losses averaging over 1.1 lakh rupees per trader. Hence, it begs the question, is this the much-needed circuit breaker, so to speak, or is it a shock that could choke market participation? At her post-budget press conference, we heard from the Finance Minister, Nirmala Sitharaman, and she made the government's stance loud and clear that this hike targets only F&O and it's meant to protect small investors, not punish the markets. It's a claim that she has reiterated once again today when we were in conversation with her. But let's listen in to what the Finance Minister has said specifically about this.
We are touching only the futures and options. STT otherwise बाकी सब का ट्रांजैक्शन के ऊपर कोई नहीं किया, मगर जहां स्पेकुलेशन, हिंदी में सट्टा बोलते हैं, स्पेकुलेशन ज़्यादा और समटाइम्स हाईली रिस्की, क्योंकि हमें मैसेज आता है लोगों से कि इधर बहुत लॉस भी फेस कर रहे हैं लोग जिनके हाथ में इतना एक्स्ट्रा पैसा भी नहीं है जिससे वो स्पेकुलेट कर सकते हैं. सो दिस nominal increase is purely aimed at high speculation, only to deter them. मकसद बोल रहे हैं, हाँ, उनको थोड़ा डिस्करेज करने के लिए. हम इसके खिलाफ नहीं है, ज़रूर एक्टिविटी जो होता है उसका रेस्पेक्ट करते हैं, मगर इतने लॉस और इतने छोटे छोटे लोग का लॉस को सरकार देखकर कैसे आप चुप रह सकते हो? डिटर करो, थोड़ा उसको पीछे हटने के लिए. So
the government is citing the protection of small investors, this entire move, not as a revenue stream for the government, but the reaction from the markets has been anything but mild. Look at the capital market stocks. They've seen deep cuts today. Brokerage platforms assessing the hit. Even industry voices are divided on this. In fact, we heard from Zerodha's Nitin Kamath. He's publicly wondered in a post on X that he put out. There you have the quotes before you. Whether this hike is really going to dent speculative F&O activity. He argues that traders often pay more in brokerage and slippages than they do in STT. In fact, we also spoke to market leaders to gauge the sector's pulse. Let's get you some of those reactions.
Market didn't like the STT stuff,
yes.
So they started selling. In any case, backdrop was already this gold and silver debacle had already happened about the commodities, and then on top of it, this STT, this irritant comes, Right. It is very small thing, and actually for investors, it doesn't matter at all.
Right, agreed.
It is only for the speculators, which is, they have touched it. This is not the time we should be actually taking panga with any of these investors.
See, we have seen last 11 years, a lot of increase in the options STT. This is a STT increase on futures more than the options in some ways. And it was expected also to the extent that there has been a lot of criticism of over speculation happening in Indian derivatives market. In the short run, of course, there will be volumes that will be affected.
STT increase is to orient people towards long-term equity investment. Today, the STT on intraday cash will be lower than that of F&O. So it therefore orients people to look into the equities market and plan for long-term equity investment. Arbitrage funds which try to trade futures versus underlying cash may become costlier because of the increased STT. So the attraction towards, say, bank deposits may increase. That is another outcome that can happen.
So you heard from the brokerages, you're hearing from the exchanges as well, which is why tonight we are asking the big question, this STT hike, can it really curb trading excesses, which is what the government is hoping for? And joining us to break this down is A. Balasubramaniam, the MD and CEO of Aditya Birla Sun Life AMC. Good to have you with us, sir. Mr. Gupta is also with us. JN Gupta is co-founder and MD of SES, and he, of course, brings in all his experience at SEBI. Rajesh Baheti, the Managing Director of Cross Seas Capital with us, along with market expert Ajay Bagga, and Tejas Khode, the CEO and co-founder of Fires. Gentlemen, welcome to the show, and let's dive right in. I need very short and sharp answers, if I may request you to just set the stage for me. One line on your position and one line on why. Mr. Gupta, if I can ask you first. You think the STT hike meaningfully curbs speculation, yes or no?
I will ask a counter question. First of all, good evening, everybody. I will ask a counter question. Has increase in excise duty on liquor or cigarette curbed the consumption? The answer is no.
Right.
The issue is something, if people are hooked on to something, you can't make them change by 0.05 or point something.
What is the single most important guardrail that you would add right now if you had to? Short answer again.
Yes, so I am saying that if my counter question is this, I have seen for last 30, 40 years, increase in excise duty on liquor and tobacco. And I have seen the consumption going on. If you read the newspaper, then you find that the alcohol consumption in India is going up and up compared to many other countries. So it is the taxes are not a deterrent to users.
Right.
Let us be very simple.
Very simple. Bala, what do you say to that? From a long-only institutional lens, does this hike in STT make the broader equity ecosystem safer, or do you think it risks impairing the depth and the hedging tools that funds rely on?
Then I see is will bring in the necessary behavioral change from a speculative mindset to the ownership mindset. I think my view will shift psychologically for people to look at, should I speculate and by bearing my cost of doing the transaction is going up because of the STT. So definitely, as Gupta was saying, that not necessarily this will lead to a significant reduction. Those who have developed the master, or rather the people who have been playing the market in the F&O market, are the people I would assume the informed investors.
Yes.
One strategy that I just want to highlight, which was of course shared by NSE MD Ashish Chavan today morning in our closed door group meeting. There are only about, out of 7.5 crores investors who trade in the market, roughly about only 25 lakhs retail investors trade, individuals, and out of which only about 10 lakh people frequently trade in the F&O market. To the extent the people I would assume are informed investors, in so to speak. But this increase in STT definitely is giving a signal to the people who are actually uninformed investors who have been coming to the market in the F&O market and losing money. Is something is also good intent. I would say, I use the word, the government is also caring for the people who are actually trading in the F&O market without knowing how serious it could be.
So you think this is more of a signal, which is what the government is hoping for as well. Rajesh Baheti, net for small traders, is this going to be that helpful nudge that the government is hoping it's going to be, or you think it's going to cause this harmful friction? In one line, where does the real cost bite? Is it going to be STT or the slippage or the misuse of this leverage?
Very simple. If the government wants to send a signal, and clearly they said this is more for signaling and not for revenue. And we want people to go more towards the cash market and long-term investing. Why wasn't this done together with removing the STT on delivery?
Right.
You could have removed the STT on delivery, given a very, very positive signal, go and buy stocks for delivery and get out of F&O. We are making that tax-free in terms of transaction cost. There is anyways taxes on short-term and long-term gains, which was the reason STT was introduced when the taxes were abolished. And now that those taxes have come back, if you wanted to send a signal, you should have sent the signal in the right manner by, at the same time, removing STT on delivery. But you've not done that. So clearly there's a revenue angle. Obviously, nobody wants to admit it. But let's face it, there's a revenue angle. There are many other ways to skin a cow. And
Mr. Bagga, what do you say to that? Mr. Baheti is saying there is definitely a revenue angle. Do you think this is going to dampen volumes and liquidity is going to get affected materially from the 1st of April? Or do you think this is going to be transient, the impact?
No, I am not bothered about the revenues of the brokerages because and the stock exchange. Stock exchange, NSE makes 80% of its revenue from F&O. Bombay Stock Exchange makes 60%. Obviously, they can't talk against the government action. So, and brokers, if you look at, they're making anything from 40 to 65% of their revenues from F&O. My questions are threefold, Vikram. Why aren't you addressing the high frequency guys? Why aren't you taxing more the people whom you have allowed to co-locate within the exchanges and sit and fleece the retail investors? What Bala is saying, only 10 lakh Indians are regularly investing in this F&O. So why aren't you protecting them against these high frequency guys are not adding anything. In fact, they have made Indians lose 1 lakh crores and they have gone away with the SEBI taking very limited action. They just paid the fine. They've gone away laughing. You can't catch them. They have no permanent establishment in India and they continue to operate. Why aren't you addressing that? If you look at
Valid
second
question.
is STT.
Valid question.
If you're looking at STT, STT has gone up at 35% CAGR.
Yes.
In the last 4 years, your income tax, personal income tax has doubled. Your corporate tax is 70% up. STT has gone up from 23,000 to 55,000. And this year, the target was 75. We are probably coming in nearer to 57 because last time around it was raised by 60%. After that, volumes have fallen.
Yes.
Third, I totally agree with Mr. Baheti. You want people to go into long term, make mutual funds tax-free. Anyone comes through a collective investment vehicle, why don't you make AIFs tax-free? At least somebody is managing those. And these poor Indians, these 7 crore Indians will not lose money. Make mutual fund, no STT, no capital gains. Give them things like that.
Right.
And the equity, the cash equity, make it tax-free again. Say 1 year you hold cash equity, I will not charge you long-term. If you're really bothered about this is no understanding. And even the Income Tax Act does not define F&O as speculation. So what the income tax issued or the finance minister calling it speculation or using a very bad Hindi word of satta, I think that was out of order totally, Vikram.
Tejas, I saw you nod in agreement to what Mr. Bagga is saying over here. Will behavior actually change, you think? Fewer trades, longer holding periods, or do you think traders simply absorb the cost? Which cohort is going to shift the most? Is it going to be the first-time retail, the active F&O, or do you think it's going to be the proprietary and the high-frequency trade desks?
It will impact everybody, Vikram. First of all, I respect the opinions of all the other panelists over here. I'd like to take a few steps back and maybe talk about the importance of speculators and risk takers in our financial markets, right? They've almost been taking brickbats from everybody who's offering commentary on the subject. But let's not forget that financial markets can never be close to efficient without people wanting to take risk and earning a commensurate return for that service they offer to the markets. It's like they're the oil of the engine, and to tax them like this to the point of it becoming so punitive is just going to do more harm than good.
Right.
Look, STT was introduced in the year 2004 by Mr. Chidambaram, and it's gone up like 3 to 4 times. It's gone up 3 times in the last 3 years alone, right? And why was it introduced in the first place? To ensure tax compliance, because people were not declaring how much money they made in the markets. And so this was like a pipeline, a tap, which can increase the force of the tax collection and ensure compliance. It works similar to a TCS, right? Like a toll gate fee that one pays.
Right.
So by increasing this, will this affect participation? Yes, of course it will, because unlike what somebody said, traders cannot be equated to addicted smokers or drinkers, like alcoholics. And the reason is because they are rational-minded people who come to participate and make money, right? And this is a rational endeavor. So they cannot be equated to alcoholics or drug addicts. And so I don't at all advocate for that.
Right.
But yeah, would it impact volumes? 100%. Why wouldn't it?
Right.
Like,
Mr. Gupta,
for
how do
instance,
you
let me
come back
take
on
the
that?
analogy.
To what you're hearing from Tejas, one risk that you're worried about. Do you think volumes are going to migrate? Would you concede that? Offshore shifting or a rise in informal leverage? Just the sharper worry that you have on this.
Absolutely.
Mr. Gupta.
Absolutely. So those who can afford can already have already
Let me take that
moved,
across to Mr.
residents to
Gupta.
Dubai.
Let me take that across to Mr. Gupta, Tejas.
Okay. Thank you. I am again saying whether the finance minister or ministry or everybody is really knowing who are the people who do trading in the option and future and lose money. You have two sets of investors. One who really invest by knowing or by something, but other set of investors who does the investing by the induction effect. They just say that, oh, I made so much profit in option, I just spent 2,000 rupees margin and I got 1 lakh rupee next day. So I am induced to that. So anybody who wants to make quick profit, become rich overnight, I am only saying one thing, greed is married to grief. You will meet this. There is no divorce provision in these two. So we cannot protect those people who wants to become overnight rich. So now what you are doing is you are harming other investors. See, so
you're saying protection is not possible, Mr. Gupta. If I'm reading you correctly, you're saying that protection should not be given. It is not possible.
I'm saying while giving a protection to a small set who may not be really deserving the protection because they are doing it consciously, you are causing harm to million others. What is happening when you do all these things? The liquidity from the market wipes out. There will be lesser and lesser transaction. So ultimately, the transaction cost goes up. When the transaction cost goes up or the buy-sell difference goes up, then mutual fund will lose out. The individual investor.
Let me ask Bala about this then. How is the impact likely to play out, Bala? The broader mutual fund industry, are you concerned that reduced derivatives liquidity is going to make hedging more expensive for fund managers? And do you think that is ultimately going to affect the stability of the NAVs?
I don't see it's a big challenge, Vikram. Given the fact that the introduction of STT, initially it could have some kind of knee-jerk reactions in terms of the transaction will become costly. At the end of the day, anybody who trades in the F&O market, one is an informed, and second is anyway looking at the speculative gain. And to the extent you also know what is the cost of trading in the F&O market with the introduction of STT. Therefore, it only became a little costlier than the previous period that they had.
Yes.
But from the broader point of view, the way I think mutual funds are participating in the developing the market, more and more participation coming in the market, I don't think liquidity will have any kind of impact. Price discovery is not going to be an impact. But definitely the participation levels, I think people who have not been successful in trading the F&O market for a variety of reasons. With the increase in cost, probably they will be taken away from the market. But as somebody mentioned about, Banga mentioned about the frequency, the high frequency traders, they are not going to go away given the fact that their entire business model is built around the F&O trading worldwide. Therefore, large institutional investors, when they come, they would rather pay this STT, not shying away from trading the market, as long as they have the visibility of making money. And mispricing is the one where they take advantage in the F&O market. That will remain. That's the nature of the market. That will remain. But I don't think it will have any impact, so to speak, on the volume of trade.
Mr. Baheti, what do you say? Because one argument is that this entire move could have these genuine hedgers become the collateral damage as protective puts get pricier. Do you think this is going to reduce prudent hedging and raise portfolio risk in the real world?
See, everybody wants to come and trade in a liquid market. And liquidity in a market is a statistical measure. It's very easy to measure. So what you need to do is take the example of our Indian markets. Look at the liquidity, the statistical liquidity stocks that are F&O have in the cash segment versus the stocks that are not in the F&O. And what is the statistical liquidity that they have in the cash segment? You will see the data as clear as day.
Right.
That the stocks that are in the F&O segment are far more liquid in the cash segment than those which don't have F&O in the cash, that don't have F&O.
Right.
So if you are going to target F&O,
Ajay Bagga, what do you say now? If we are going to see that repercussion in the fall in volumes, if they fall about 15 to 20% initially, do you think that's an acceptable price for curbing excess, or does that impair price discovery in a way that ultimately hurts everyone, like is being pointed out? Mr. Gupta also alluded to that.
No, Vikram, again, I'm saying the courageous countries are going after the high-frequency guys. It is not that they are looking at inefficiencies. They are manipulating the markets. And it's a very unequal fight. Even the regulator has copped out. So the regulator is doing a cop-out. If your F&O volumes, Vikram, are 400% of your equity cash, while the rest of the world runs at 30%, 30 times cash, and you're running at 400x cash, clearly there is something else. And that's not the retail investor. That's the manipulating high-frequency guys who are sitting there. One of them you find and you let them go away. These are the ones who are fleecing the country. You're not addressing that by raising these taxes. As Bala said, they will continue to operate. So volumes will be more than enough. The mutual funds hardly operate in the F&O, so it doesn't matter to them at all. To most of the Indian investors, it does not matter. In fact, the retail guys, I would like them to come through the mutual fund route. Rather than coming directly, they get butchered directly.
Right.
But having said that, for a free market to keep on using tax as a tool and to look at it as a sin tax, that's the wrong thing, because the big guy will not worry. The volumes will not dry out. We are 400x. So, and we have to go down to 30x. That's what all developed markets have.
Right.
So clearly there is somebody manipulating the markets. There are countries who have now said, get out of the exchanges. I will not allow co-location. There are countries which are saying, I will not allow high-frequency guys to operate in my markets. What value, what nation building are those guys doing? They don't even have permanent establishments. They are not paying any tax apart from this STT. So you increase the STT for them.
Tejas, is that a likely solution? What do you say? Are you expecting more strikes per day? How are you going to deal with this? Are you expecting more strikes per day churn to manage the costs, or do you think there will be fewer, larger, more strategic positions? Because this entire, we need to find a solution now to be able to move on with this, because every time we can't use tax as this weapon.
No, absolutely. First of all, to the point that was just made about HFTs overtrading and taking up the turnover to 400x the GDP. Let's not forget that that is notional turnover. It really is a meaningless number. The premium turnover is a fraction of the GDP, and it's really not a relative comparison whatsoever. With respect to HFTs are actually foreign portfolio investors, right? But they're allowed to take broking memberships in India and operate like a domestic participant, which I believe should be looked at by the regulators or whoever is in charge. But despite that, I don't think that raising STT is good from any angle. I think one must empathize with traders and the role that they play in price discovery. It's easy to make an argument that F&O markets don't help in the discovery of cash equities and that everybody should become a passive participant and start moving towards mutual funds. Guys, let's not forget that 10% of the equity market capitalization of India is owned by retail investors directly. They own to the extent of 40 lakh crores, equivalent to the equity AUMs of mutual fund industry put together.
Yes.
So from that perspective, we need to appreciate the fact that they need to be given instruments to hedge. And you can't be giving them instruments to hedge when they don't have any price discovery or liquidity. It's almost as if this side of the argument is brushed aside almost by everybody. It deserves attention. If we are going to become a mature market in the future, we will need to understand that speculators have a role to play and they are an important part of the ecosystem.
Bala, do you agree with that?
Sitting on both sides. If you have Warren Buffett sitting on both sides of the trade, you're really not going to have much liquidity, isn't it?
Bala, would you agree with what you're hearing over here? Because now is the time for solutions. Should policy consider incentives for liquidity provision, these STT credits for market makers, passive institutional hedgers, or do you think that could easily complicate the ecosystem unnecessarily?
think the point that is being made is right. You need day traders, you need speculators, you need the F&O market participants, and also you need long-term investors. I think that's the way the market is always built from a structural point of view. Liquidity largely comes on the basis of the variety of participants coming in the market. As far as the STT is concerned, anybody who, of course, trades in the market, it of course takes into account the outcome that you will generate after paying all the taxes, whether it is security transaction tax or GST or many other things. Therefore, this introduction of marginal increase in taxations, of course, I'm also will be taken into account while trading. It's not going to make people actually shy away from trading in the market just because the cost has gone up by, say, about 0.0 to 0.05, though it looks very large from 150%. But the only thing they need, probably they'll have to look at it a little longer term contract rather than a short term contract, where they'll have an impact. Is if I have to turn my portfolio every 7 days, naturally my cost of transaction is going to go up.
Right.
Therefore, the whole model which used to exist in the past, the 1 month settlement versus 1 week settlement,
Yes.
these are some of the things I think I have to undergo has changed as a behavioral part rather than anything else.
Mr. Baheti has a point to make before we wrap up. Go ahead, sir.
I'll just give you a recent example. 2 years ago, RBI put out a circular that says if you want to do currency trading in the markets, you have to have an underlying exposure. We do not want speculators to trade in the market. And now there is no market. So I think that's a very telling example of what you can end up doing to this market.
That's true. So speculation is required. That's a popular view that is coming through. Mr. Gupta, I'm afraid we are running out of time, but these sharp views, the government is saying the STT hike on F&O is a necessary guardrail to protect retail and cool off speculation. And critics, of course, are warning it could dent liquidity, it could nudge trades offshore and penalize genuine hedging as well. We heard some concrete alternatives, but of course, we will have to keep asking. The big takeaway, of course, is that effectiveness is going to be judged by data, the loss ratios, the liquidity, the spreads, where the volumes migrate after the 1st of April. And we're going to track those numbers closely. But my thanks to our panel, J.N. Gupta, Rajesh Baheti, Ajay Bagga, Tejas Khode, Mr. Bala Subramaniam, thank you very much for joining us with your perspective on the big question. Completely out of time on the show. And of course, we will be tracking this very closely. There will be many more discussions and we'll keep getting you perspectives from all the leading voices. But for the moment, from me, Vikram Oza and the entire team, thank you so much for joining us. Good evening.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं।
Budget 2026, the growth agenda.
Welcome to this very special conversation to discuss the fine prints of some of the major proposal, emerging out of union budget presented on 1st February. We have with us CBIC Chairman Vivek Chaturvedi. Thank you, sir, speaking with NDTV Profit. I'd like to start by asking you that India is soon going to roll out the comprehensive, custom duty framework. How you think this is going to counter the steep US tariff? If you could elaborate on that framework and how this is going to soften the blow as well.
Well, so if you have looked at the budget proposals, the primary aim of the customs duty rationalization has largely been to ensure availability of critical inputs and raw materials for our industry. The thought process behind that is make our industry more resilient, more competitive, and shore up to the global difficult times that the economy is facing.
True, sir. In fact, you just pointed out these strategic sectors, the duty exemptions getting extended to even strategic sectors, especially your nuclear power project till 2035. Wanted to understand the idea behind it, one, and second, what would be the possible revenue impact? Is there any estimation on that front?
I would look at it more from the perspective of the criticality of the sector, number one. We looked at energy security. Now, nuclear energy, as you know, for civilian purposes, it is nuclear energy security for the country. So we have come up with a dispensation of exemption for setting up of a nuclear power plant. And earlier, there was a limitation of such an exemption for power plants of 440 megawatts and above. We've removed that. The government has very consciously removed that. So it's now a facility available for setting up a nuclear power plant, irrespective of the capacity. Not only nuclear energy, if you look at how we are trying to give very critical inputs to our energy sector, we have done away with the customs duty exemption on monazite, which is used for manufacturing the magnets for electronic vehicles. We've done a customs duty exemption on sodium antimonate, which goes into the manufacture of the solar glass, which is a very critical component of solar glass panels. It's almost 26% of the cost of the solar glass panels. So again, capital goods have been exempted from duty if they go into the manufacture of lithium ion cells, which go into the battery energy storage systems. So from nuclear energy down even to a battery energy storage system, the government has been very, very focused in ensuring that sectors like energy, sectors like defense, for example, where we have given exemptions to raw material for manufacture of parts, for aircraft, for defense purposes, for the purposes of maintenance and repair operations, or customs duty exemption on import of parts for the manufacture of civilian aircraft. So all sectors have been given a criticality which is there for the country and for the economy, and exemptions have been dovetailed accordingly.
Just wanted a clarity, sir, that since duty has been, extended to many sectors, and one of the reason, of course, being that we are hoping to conclude the deal with India, US as well. Some of your proposal actually going to have give greater access to US market, your civil and defense. What's the thought process? Are you hoping that this will anyway come and this is the part of your concluding the US-India deal?
You see, any free trade agreement or a trade deal is, of course, now a reality. Let's not shy away from the fact, because the government gives a very conscious thought before proceeding with the FTA. From the customs perspective, we also look at how we shore up our industry and see to it that a customs duty exemption, particularly on inputs and raw materials, helps the industry withstand that sectoral pressure in the event that in the FTA, a line item which will be a finished product under the FTA would get some sort of a preferential access into the Indian market. So the idea is to shore up the domestic industry to the extent possible by giving them benefits on the input side, so that when the FTA becomes a reality, a preferential entry of a finished good, the Indian domestic industry doesn't suffer inordinately because of that.
Do we expect more rate rationalization in customs going forward? Because this time, the extension has been given, but not reflecting on the changes in the rates. So do we see any sort of restructuring? Is that something is on the table?
You see, customs is a very dynamic environment. It depends a lot on the global supply chain, the entry of the goods in the country, the demand and supply situation, how commodities move from a country X to country Y. The FTA impacts the movement of the commodities in the country. So it's not a one-time approach. You see, customs duty nuances are tailored according to the pattern of imports into the country, and a variety of other micro and macroeconomic factors as well. So it's not that we've done this and that's the end of it. It's an ever-evolving, very dynamic environment.
It's an ongoing process.
It will always be an ongoing process. It has actually always been an ongoing process.
So moving on, to compensation cess, and it has been notified. It's ending before the deadline of March 31st. Wanted to understand that how CBIC is going to implement the new cess on pan masala, and what's the preparation there?
So, as you might be aware, the new National Security Cess Act has kicked in with effect from yesterday, the 1st of February. The CBIC formations are at the forefront of implementing this. It's a new act, so it basically provides for all existing pan masala units, in fact all units, to register under the act. That's the first thing. So the registration window, even as we speak, has been open since yesterday. What it envisages is that the moment I will apply, I will get what is known as a temporary registration number, and my application will be decided by the proper officer within a period of 7 working days from the time of application.
Okay.
But notwithstanding the fact that I may still have time before the registration application is decided by the proper officer, the temporary registration number, which is allotted to me the moment I hit the portal, that enables the assessee to pay the duty on the cess. The cess becomes liable to be paid on the 7th of this month. So people who have declared, who have entered into our ecosystem since yesterday, for example, the payment liability will kick in on the 7th of this month. Notwithstanding that, maybe a registration application may be decided, of course, before that time, but may also spill over a day or thereafter. Thereafter, what we have said is that he will file a declaration in respect of the details of the machines installed in the premises. The details would also include very critical data relating to the capacity of the machines, the make and the model, the RPM of the motor, the gearboxes, the number of funnels in a machine. And we've given the dispensation that such technical details will be accompanied with a chartered engineer certificate on behalf of the assessee. So, because obviously an assessee will find it difficult to look into these technical details.
Of course.
So he can employ and take the services of a chartered engineer, and the declaration can be made accordingly. CBIC's proper officer has been given a period of total 90 days from the date of declaration to verify the contents of the declaration and arrive at a determination for the cess.
Okay. Since it's already come to an effect, wanted to understand, is there any estimation on how this is going to shore up your revenue? Any estimation on that?
It's very early days. It's very early days. So, I mean, it's just the 1st of February. So let it settle down a bit.
I understand, because even though it's a new cess, except cigarettes, the tax incidence would remain same on most of the items.
Yes.
So just wanted to have some thought on that, especially in the context of when GST rate rationalization impact has seen, we've been seeing that on the collection figures. So do you have any ballpark figure in mind as far as collections are concerned?
I would say that I would refrain from commenting on that part primarily for the reason that if you look at, of course you're right in saying that there could be existing people, but then we've also given them the leeway to see if machines are uninstalled or they are not in a working condition. There could be some downside on that account also. So the real picture only emerges, and we'll have a clarity about all your questions actually downstream, because then we'll have a complete and very clear idea of what is the ecosystem, how many machines, how many assessees, what is it that we are looking at in terms of revenue.
But can we say that it could be on par with what you were getting from the previous regime, that is compensation cess, or maybe higher?
We hope so. We hope so.
Okay. On the GST collection, quickly, sir, we have seen the numbers at 6%, and still I think it's trying to absorb the rationalization exercise. Do you think that the numbers would increase, of course, with the new cess and other measures which usually department takes in terms of enforcement actions?
Well, enforcement actions apart, I mean, if you look at our collections figures that were released yesterday, and if you compare them, let's say, with a year back, I mean, January 25 to January 26, largely comparable figures, notwithstanding the fact that rate rationalization happened in September. So that looks positive from the perspective of an increase in the taxable supply of goods. With economy doing reasonably well, with projections of a GDP for the next BE 26-27, and with the tax buoyancy of around 0.94 as far as the GST estimates are concerned, we would hope to have GST back on the track, maybe not in the immediate term, but definitely in the short to the medium term.
Even you increased the excise duty collection by 51,000 crores.
Yes,
so
yes,
in anticipation of the new levy?
Well, look, I was talking more from the CGST perspective. Excise, of course, is doing even well even currently, because we did impose a ₹2 per litre levy on petrol and diesel in April 2025, if you remember. So excise revenues are pretty healthy, if I would say so. Growth projections are also good. And of course, the growth projections for 26-27 are definitely higher, growing on the back of the fact that there is now a new levy on tobacco and cigarette rates, the levy, of course, and the incidence has now gone up.
So you're expecting the cost of cigarettes would go higher after, based on the new levy?
Well, yes, in the sense that yes, if the duty rates go up, I'm sure the industry will also respond accordingly.
Sure. Last question, sir. Since GST 2.0 we have seen, is this process is still on in terms of, do we see any more reforms coming in the GST in upcoming council meeting? Is there any date decided on the GST council meeting? Okay, but any major reform is something you're looking at, in the GST?
No, the government is working on a lot of things, but let the council convene. You'll get to know then.
Fair point, sir. Thank you so much, sir, for taking out time for us and speaking with NDTV Profit. Thank you so much.
Thank you so much. Thank you.
Welcome to this very special conversation to discuss the fine prints of direct taxation emerging out of budget presented on February 1st. We have with us Ravi Agrawal, CBDT Chairman. Welcome to this very special conversation, sir. I'd like to start by asking you that could you take us through the major reforms under the direct taxes which going to have a direct impact on not just taxpayers but the shareholders, the investors, if you could just highlight those.
Yeah, so if you see the developments in this area in the last about 1.5 years, beginning July 24, initially we started with the simplification of the Income Tax Act 1961, and essentially at that point in time we focused on only simplification of language and presenting the provisions in a manner which was easy for the people to understand and comprehend. This was approved by the Parliament in August 25, and now it is the Income Tax Act 2025 to be rolled out from 1st of April 2026. So the